you're sending it, if I'm sending it, for example, to you, Naved, from Singapore at this point of time, I give you the, the details, and you can be standing outside a location or looking at your phone, logging into your bank app, and money reaches. So inbound to India is super. It's built on multiple things, including regulation and the technology and the domestic payments network. But if we were to reverse that flow, like Venkatesh mentioned, there's a long way for us to go, and regulatory hurdle is amongst the biggest ones there. But let's hear from Mahesh on the how he looks at the overall payments system here, and is there like a technology answer to this big challenge? Firstly, what he believes is the biggest challenge right now, and what do you think can be done beyond, of course, regulations need to change, but anything aside from that, Mahesh, that you would like to add?
Thanks, Sohini. Thanks, Naved and Venkatesh. Have encapsulated most of the relevant stakeholders and the problems in remittances. The one thing to understand very clearly is any innovation in not just remittances, but cross-border payments or payments in general, nothing is going to affect the core service, which is basically sending or receiving money. What you can work on is the means of delivery, make it as digital as possible, reduce paperwork, reduce physical contact, the speed as real time as possible, and also the convenience of it. What is the UI looking like? What do you need to do to make sure that you're KYCing or you are being KYC'd? And basically, this is what leads to the offshoot of how do you actually look at the revenue and cost angle here. Revenue is a very tricky subject. It's very competition led, and that can change within a matter of minutes without very apparent logic. But when you come and look at the cost part of it, right, there's a large degree of improvement scope in being more transparent, in actually being regulated to the extent of not having extremely unrealistic charges or charges that don't make sense. For example, a flat fee irrespective of the quantum of money that you send in general makes it very difficult for smaller businesses or retail customers, right? To drive costs down, as both Venkatesh and Navid said, India has made tremendous leaps on the domestic payment infrastructure to the extent of the entire world sitting up and taking note of what India has done. Every other country in the world is now having their own version of what UPI has managed to do here in India today. So we're very, very well placed in actually moving towards the digital delivery part of it. Of course, the last 8 to 10 months of the COVID situation has accelerated that further. But two places where we really need to optimize is how do you optimize the Forex and make it more transparent? And how do you actually involve more progressive technology partners? How do you sort of start getting into the share of what 81 banks are doing right now? How do you get more technology companies like a TransferWise, like what Rapid does? How do we start participating more in this process and thereby start bringing down costs which are involved in the entire process, make the entire digital delivery more transparent? That's what I would, add on to what they've already succinctly encapsulated.
Thank you very much, Mahesh. And that's a very good segue into where I wanted to go next with this discussion, which is on, yes, there is, it does appear like regulation is one of the big challenges particularly for outbound, despite the fact that we already have the core framework or the basic building blocks of the domestic payment system is really world class. So if we look at the cost, and there are two kinds of cost, Mahesh, like you mentioned. There is the cost of producing those services. Like, is it even possible to offer cross-border remittances at lower costs from India, and therefore reducing the cost for consumers? And what do you think can be done? What do you think we can do to solve this challenge? What is the technology or innovation answer? Not a regulation, not the fact. For a moment, assume we have this very interesting circular that comes out tomorrow from RBI, which says, hey, now you can do exactly what an 81 bank can do. That puts you at par. So the regulation hurdle, assume, has been resolved. What can be done to reduce the cost of producing this service and in turn pass it on to consumers at a much lower cost? And maybe, Mahesh, we start with you and then go to Venkatesh for this one.
So first off, would all love to read that circular whenever that comes, and
I
it'll
know.
inspire a whole new wave of innovation and entrepreneurship. The one thing that is very clear when you look at the Indian market is we are a market of scale and numbers. To the extent that
Yeah.
like any market sizing problem for India in any industry, you'll be able to like make it look like it's going to be very worthwhile to get into India. So we don't have the problem of say, like for example, a city like San Francisco or even Singapore, for example, very tech savvy, very deeply penetrated, but they're limited by the size, right? In India, we
Mm-hmm.
really didn't think that apart from 250 million smartphone users, there's any more scope for technology companies or e-commerce companies to penetrate. But today we are sitting on the cusp of 550 million smartphone users. Flipkart and Amazon, all through the year, through their sales and through their initiatives, through the backbone of logistics partners, they've gone to tier 3, tier 4 villages, so on and so forth, to unlock demand, right? So there are two things that will need to happen on the back of that circular is competition is going to be very immense in terms of multiple people coming in to take part in this market. Second, with proper technological innovation and education, you will be able to like get a large section of the population who don't have the means today to participate in cross-border remittances through a technology wave. They are still participating in offline methods. There are multiple offline, extremely well-oiled machinery. Uh, Apart from what people like Western Union do, like I've known of offline folks helping in money transfer with a non-technology angle, and this has been happening for decades, right? From Gulf, from Southeast Asia, so on and so forth. There is an opportunity to sort of get them into this marketplace, which essentially means you're going to start seeing whatever the 19-20 billion of outbound versus the 83 billion of inbound, that is going to start increasing by a multiple of whatever 2x, 3x, 4x. And the best part is as that pie increases, as there is more volume and more competition, automatically efficiency gets into any marketplace and you see costs come down. Because that's the only way you can get costs to come down once you actually increase the number of people playing, both from a consumer as well as a production point of view. Once you see that marketplace start becoming more and more open and more participants come in on both sides of the marketplace, there is no other way but the costs to come down, because you will be seeing scale benefits which you will eventually have to start passing on to the consumer, because not because of the inherent goodness of any company, but because there's competition which is going to start bringing costs down, right? So that is how I would look at
Yeah.
it. India is a
Very,
land of
very
scale.
interesting point of
It's
view,
not very, yeah,
Mahesh. Yeah.
yeah.
Yeah. So what I'm hearing you say is, hey, if this regulation does kick in, then it will lead to a lot more competition, which will drive scale, which in turn, so the market forces are going to come into play, and that can overall only have moved the market in one cost in one direction, which will be down and which will get passed on to the consumers. All right, let's hear from Venkatesh. What else, Venkatesh, do you think beyond competition? Yes, competition always does lower the prices and the costs of producing the service with scale. What else do you think? Is there any other innovation, whether technology-led or process-led, do you think could reduce the costs?
So globally, as a company, we think that we're saving our customers around the world close to $1 billion each year through our service, and we see no reason why we can't bring that to India. So the dream for us in India would be a few things: that we can onboard the customer instantly through a direct or an indirect access through Aadhaar. That's how we onboard our customers in many other countries in the world today. And the second dream for us in India would be if we can actually connect directly into the payment infrastructure. So what does that mean? In the UK, for example, we bank directly with the Bank of England, which is a central bank. We have a settlement account with them. And we're also a direct participant in the faster payment system. That means we actually own the entire customer journey, both the front end, but as well as the back end. Right? There is, we don't depend on an external partner like a bank, which might have their downtimes and things like that. And we're able to offer that seamless experience, which is what makes a technology-led service like ours potentially superior and also lowers costs over time. So I would say this is the dream for us.
And it's a very, very noble dream, and I think it's actually an ideal state, right? That is the situation where this is the circular that I was just speaking about, which Mahesh also said he would love to read. This is taking that a little further to say you actually get absolute at-par treatment with banks with regard to access to payment, identity, and forex trading systems. And if you get that, then within the definition of the service that you're providing, you are able to do it much better at a lower cost, faster, and hopefully with a better customer experience.
Correct.
That's interesting.
And this has been the building blocks of what we have done in every other country, even in Asia. So I see no reason why we can't be eternal optimists and hope that the circular is here sooner than we all think.
No, absolutely. So it's very interesting that in this question we're still getting process and regulation and market forces being the primary determinants. I'm not yet hearing anything which is like said cryptocurrency will solve this, or any new tech innovation is going to be able to resolve this. So it's really we don't really need to wait for some new invention to resolve this. But let's hear from Naved if he has any other point of view on the cost angle for providing remittances. Naved?
Yeah, sure, Sony. So I have a slightly contrarian view on the cost. If we look at how we are using the outbound right now, and the bulk of the outbound is for education, right? People are sending their kids outside India to study, and most of them are from affluent backgrounds, right? Most of the people are either in the US or in the UK or in Australia, Europe, etc. And if you look at the current cost right now, I think per transaction, I may be wrong because I'm not into this, but I think it's close to 200 to 300 rupees, right? Then there is an FX on top of it, right? There's a cost of KYC, which right now the bank is doing, right? So I don't think so the customer who's sending his kid abroad or for education, or somebody who is sending his relative abroad for treatment would mind paying 200-300 rupees for a transfer, right? I don't think so. For him, what would really matter is the how he can get the money across as fast as possible, as transparently as possible, and the kind of modes that he can adopt for sending that money, either cash or to a bank account or to a card or to a wallet, right? So that's going to be the survival of the fastest, as I would want to call it. It has to be transparent, not opaque. The sender should be able to see how much he's paying, what is the kind of effects he's getting, and he should be able to do it from the convenience of his home or his office, whatever, without going into a bank, walking into any location, or somebody coming to him and doing all the paperwork. And that is, I think, where the success of this will lie. Obviously, there'll be compliance, AML, etc. around this, how we can get it all together. Customer acquisition will be a huge challenge. I know that the stickiness for digital channels is always more for a customer. If he downloads a MoneyGram app or a Western Union app or a Transferize, whatever app, I'm sure that he's not even going to look at a bank, or he's not going to walk out and he's not going to call any agent. He's going to do it himself, sitting at home. And he would want like a IMPS sort of an experience, right? Real time, as soon as he sends, his receiver gets it. Both of them get a confirmation, and he also gets a confirmation of the cost, etc. I think this is what really is going to make a difference. And that is what the regulator should also be looking at: how to provide the best service to the customer when he wants it, and in as many ways as possible, from the convenience of his home.
Yeah, that's an interesting point of view, and maybe Venkatesh, Mahesh, if either of you would like to respond to Naved's perspective here, that it's really not the cost that is an issue at this point of time; it's the customer experience that we should solve for. What do you guys think?
Should I take it first, Venkatesh?
Yeah, go ahead, Mahesh.
Yeah, so it's a very valid point that he makes. I think so. Cost is also in terms of user experience contributes to a certain sense of cost, because time is money, especially in this industry, right? I think there are multiple facets of the entire money flow. There's the KYC part of it, there's the documentation part of it, the delivery part of it, the FX part of it, and all of these in parts as well as a whole lead to customer experience, which essentially dictates which product or service or stakeholder the customer is going to stick to, or the decision of whether he should even participate in the whole cross-border remittance game, right? I think fundamentally, I think we were talking the same language. I think there is a very uh, incoherent, non-homogeneous sender-receiver experiences across different geographies, which is what makes it a little bit more uh, opaque from a costing perspective. So there's just like, for example, like if I'm remitting money to a country which has real-time rails, but when I'm going to be receiving money, I'm not participating on a similar real-time rail scenario, then there's going to be a certain amount of cost differential, which is where the stakeholders also make their margins. So so I always keep saying that payments is a business where you can't make a lot of money, but it's going to be very difficult for you to lose money. So there's definitely avenues where we can start looking at user experience, which will lead to improved costing. But I agree with the fact that like focusing on user experience is key. And I think I would just uh, place my argument with the fact that costing becomes as critical as one part of the user experience, even though it sort of just bubbles up to the stakeholder on top.
Interesting. Venkatesh, I've just been reminded by the, I'm a team that we have the last 5 minutes. So your take on this, and then we'll get into the final, final few words on this topic.
Sure. So I think really quick, we don't see them as mutually exclusive. We think that we can offer a low cost experience to a customer that also has a unique customer journey. But where I feel the real challenge is, and this isn't limited to India, is actually many customers don't even know the problem. They don't know when they go to their bank, what is the exchange rate that they're going to get? How much are they actually paying for the service? They don't know that they can actually go shopping to different institutions, whether it's a Western Union, whether it's their bank, or maybe a TransferWise or somebody else, right? And what we see is when we actually educate customers that you are not necessarily getting the best possible rate, both the exchange rate and the fee from your current provider, and there could be other options in the market, that's when we see them taking to digital channels more and adopting services from companies like TransferWise. So in places like Europe, it's actually now in regulation. If you are a provider of foreign exchange services, you have to transparently show what is the exchange rate you're offering and what is the fee that you're charging. And we believe that this will actually help customers, but will also help grow the market. And again, being the eternal optimist, I hope this is part of the circular in India going forward.
No, thank you very much for that, Venkatesh. And, there is, I'll request final words from all three of you, and we will maybe start again with you, Venkatesh. But just a segue, you may choose to comment or not comment, and, give your, one final advice on what it would take to overcome, or what's the ideal state of cross-border remittances that we should strive for India. But if you would like to also comment on the recently introduced tax collected at source, do you think that's aligned with how globally remittances work, or is it a step which makes it even more complicated? You may choose to include that or not, but at least where do you see what's the ideal state for you?
As I've mentioned before, I think, and Sohini, you added as well, the building blocks are all here in India. We have a world-class domestic payment system. As Mahesh mentioned, we have a market that is digital first and has become even more digital in the last year. So there is absolutely an opportunity to offer a fully digital offering like ours in India today, which has a great customer journey and a low cost. All that we are looking for is a nod from the regulator to be a little more progressive and try to bring cross-border payments at the same level as they think about domestic payments. I think in terms of the taxation, I think the other thing that we look for from regulators really is consistency in regulation. So when we see things like this 5% or whatever it is that's being taxed beyond a certain point, I think we're still struggling to understand what purpose it's trying to solve, given that all of the providers on this panel today do the full KYC, collect all the documents as needed, know what the source of funds is. What this does is it actually complicates the service even more, because we have to build a different customer journey for people who send beyond a certain limit, a different customer journey for less. And so we would hope that the regulator does take some industry feedback and look at other ways in which they can keep a watchful eye on the industry.
Venkatesh, Navid, your comments?
Yeah, Sony. So if I have to just link it to what's been happening on the inbound, we had a 2% service tax on withdrawals above 1 crore in India, which was really hurting the industry. That was rolled back. I think the regulator has been supportive. They have reversed that. Also, post-COVID, if you look at it, when the shops were shut and there was a lockdown, they have been really supportive in putting these shops under the essential services, and they've been allowed to open. Also, we have been really having, I would say, so frequent conversations with the regulator now on the unpaid transactions, if there are any, and they are basically pushing us to pay those out as soon as possible. But yes, demonetization was one, right? That hurt the industry. Then this was the 2% TDS. Again, COVID beyond anybody's control. But once the regulator realizes that this is something which is really hurting, I'm sure that they are going to take it back. We have seen in India that the JAM Trinity has played a huge role, the Jan Dhan, Aadhaar, and mobile. And like what Venkatesh said, we have the best in the world infra on payments. It's just that the regulator needs to take cue from what's happened in inbound and the domestic payment industry, and what is it that companies like us can add value on the outbound. I think that's something which will really help that circular, as you call it, Tony.
Thank you, Navid. Mahesh, final words from you.
Yeah, I think, again, going last has its disadvantages. They've pretty much covered whatever I wanted to say. I think just pretty much just looking at, the only thing to add is like any new change or anything that adds to friction of actually growing your market is something that will put you back quite a few years. So I would urge the regulator to see how they can unlock this market. As you said, it's a multi-trillion-dollar market, and we are sitting at less than 100 billion today, right? What will it take to 10x this market and take it to $1 trillion over the next 18 to 24 months? Should be the thought process with which they would, come out with rules and circulars. I would urge them to like start thinking about it that way, because whatever they want to do in terms of imposing taxes and cesses and stuff, it's very relevant. It's obviously valid. But at the point of time when you don't even know what this market could be over the next 2 years, you're sort of stunting the growth, nipping it at the bud. So that's how I would like frame that.
Thank you so much, Mahesh. So, I mean, if I can summarize for this panel, firstly, thank you all for your, very, very transparent, open, and really enlightening views here. I guess we have huge opportunity, as with most things in India. India remains a very attractive market for all kinds of global players. And the best part is we have the building blocks. But one other underlying theme that we heard everyone say was we're not just about potential and opportunity and building blocks. The ecosystem already has very strong control frameworks in place. So now it's up to us, and obviously at the right time when the regulator deems fit, on how to grow deeper and let the market really be free and open so that it can reduce costs, with taking advantage of all these controls and the framework which exists to be able to offer much more convenient, cost optimized, and hopefully increasing overall the pie for the entire country, both on inbound and on outbound remittances. Gentlemen, it's been really great talking to all of you. Let me hand it back over to the
Thank you to all the speakers for this enlightening conversation. It was a pleasure to listen to you all. Thank you to all the attendees and our sponsors for supporting the event. Thank you. Stay tuned.
Thank you.
Thanks, everyone.
Thank you. Thank you, guys.
Thank you.
Fireside chat on the secret ingredients to successful bank and non-bank partnerships. Welcome to Mr. Amol Dete, Editor, ET BFSI, and Mr. Prashant Kumar, MD and CEO, Yes Bank. Dear delegates, please keep asking your questions in the chat box, and we will pick a few at the end of this session. Over to both of you now. Mr. Amol, you are on mute.
Yes, thank you, Shreya, for that update. We are living in the world of network and virtual. So, a lot of things are also depends on technology and, the god of network. Well, thank you, Shreya, and thank you, PCI, in fact, IAMI and FCI for inviting us at the Digital Money 2020. I have been seeing a lot of sessions and I have also seen the agenda. I think there are many interesting sessions that you guys have actually put up and there are relevant speakers. So thank you so much for inviting us as well. And, I'm sure the participants must be getting a lot of insights from all these sessions. So moving ahead, I'm really delighted to have Mr. Kumar, who is the MD and CEO of S Bank, and comes from a remarkable and a great experience with SBI and decades of experience in the banking sector. And in fact, the topic of today's discussion, the secret ingredients to a successful bank and non-bank partnership, sounds really cool in today's environment because the traditional banks are also moving ahead with the partnership model. Gone all those days when banks will do everything on their own. There are not only NBFCs but fintech startups, and everybody is actually heading towards the partnership model. So, Mr. Kumar, to start with, today's conversation, I would like you to, tell us. Recently, RBI has also allowed scheduled banks to do a partner, to have a partnerships with the NBFCs and housing finance companies. What are the secret ingredients for a successful partnership? Because we have seen a lot of partnerships coming up. So, how successful these partnerships could be, and how could they make this successful?
So, Amol, the fundamentally why even traditional banks are moving towards this ecosystem of partnership, I think the most important thing what the banks are seeing that there is a huge population which they have not been able to service.
Right.
Now, servicing this population in a brick and mortar would be very, very difficult. It would take a very long time, and this is also a very costly affair. Second thing that because of the change in demographics and also with the availability of internet, I think from the customer side also people are not willing to come to the brick and mortar branches. They would like to do the banking at their doorsteps at the time which is convenient to them. So I think this change in the behavior of the customers, the new customers, I think is something very, very important. And banks are realizing that unless they have a right kind of partnership, then getting those customers would be very costly, would be very difficult. And maybe the customers would not like to do that if their customers are having the other option. So I think these partnership, the most important part would be where everybody would see the value in this. It would not be at the cost of others. And I think that is exactly what is happening now. And that the banks are seeing a huge advantage of having a partnership with the fintechs and the NBFCs who are able to come out with the new solutions, which are quite convenient for the customers.
Sounds obviously interesting, Mr. Kumar. But the immediate question I have is, uh, traditional banks or even the large banks have their own policies and have their own structure of the due diligence and crafting the risk parameters, whereas the NBFCs and the fintechs will come with the different parameters. So how do you actually merge these risk parameters? Maybe you will approach one customer in a different manner, but ultimately you have to match the risk framework. So how do you do it at Yes Bank, and how the industry is doing it?
So I think from both the sides of the bank as well as either the fintechs or the NBFC, I think it is very, very important that everybody works in a broad framework set up by the regulator. That is one part. Second thing that we also need to say move towards where we can merge the processes or the risk framework of the bank with those kind of NBFC. I just give you one typical example that the banks would lend to a NBFC, okay, but would not be comfortable in their loan origination process while going for a co-lending model. So I think this is a fundamental like conflict. Okay.
Right.
So if you find a NBFC good to like lend on the basis of their loan origination system, then what is wrong in say partnering with them for the co-origination? Only thing is you need to have your own risk appetite framework clearly spell out there. Similarly, on the fintech side, there are issues in terms of the KYC. So I think those are the issues which banks are trying to say resolve with the intervention of the regulator. Because from the regulatory perspective, also they are not they would not be never be in a position to say anticipate what are the changes brought in by the ecosystem by the banks or the fintechs. But once we are able to say come out with some of the those kind of things, it's very important we reach out to the regulator and seek their approval in changing the guidelines issued by them from time to time. So I think this is something which is very, very important.
So, yeah. Uh, so, Mr. Kumar, could you also add and explain me more about the partnerships that the Yes Bank has with NBFCs and the fintech companies, and also how much is actually it is helping in terms of a business? Are NBFCs and fintechs managing to get you the business which perhaps you could not have got otherwise?
So, Amol, like I would like to divide the overall banking into four different phases. So, I think so far the overall focus and the concentration was more in terms of doing the transaction. But the transaction banking is only one part. I think the more important thing would be in terms of a collaboration where the banks can acquire customers both on the liability side as well as on the loan side. And similarly, also coming out with those technology platforms where the customers can make their investment decision. Either it could be insurance policy, it could be a mutual fund. So I think that is something which is very important. Now, transaction banking, if you see, after the NPCI came with the UPI say, framework where all the banks are able to do the transaction. So I think most of us are able to take care of that part. Now, the next step is in terms of acquiring customers, where fintechs have started coming out with those kind of solutions. And I think this is exactly what banks are seeing, that maybe the number of customers which they were adding through their branches, brick and mortar branches, the fintechs are able to make that kind of addition maybe in few days, maybe in a month time, where the cost is very small and also it's very, very convenient for the customer. The issues are more in terms of whether it satisfies the regulatory framework. So I think this is something which we are working. So on the Yes Bank side, if you see, on the UPI, we are already in partnership with some of the payment, say fintechs, and 40% of the UPI transaction in the entire country is being routed through Yes Bank. And today, like we need to remember, like it's more than 2 billion transaction on UPI. I think successive month it was something around 2.38 billion. So 40% of that is going through the Yes Bank platform. So I think this partnership has been very, very successful
Right.
with the payment. But I think the next partnership, which we are now talking to number of say fintechs and the NBFC, in terms of acquiring customers. So only yesterday, like we came out with our say vision in terms of say adding 1 lakh customers every month, and we would like to reach to a customer base of at least 1 crore in next 2 years. And this cannot happen only in a organic growth. So we are looking for both organic and the inorganic growth. And I think the fintechs and the NBFCs would be really helping us in acquiring customers both on the liability and the loan side.
Mr. Kumar, you explained it really well, but I have a few thoughts, not a straightforward question. And let me put it in a manner. So even in last couple of years, large NBFCs have failed miserably, and they were like a risk to the system. Uh, at other side, banks also face a lot of challenges. Now, most of the banks are also looking at the partnerships with the same NBFC companies and all. Considering what went wrong in the past, will you be very cautious while partnering with every NBFC, each NBFC, and will you scrutinize your own policies before partnering with that NBFC, or will you also go and put a cap on XYZ amount of disbursal and will not disburse entire amount or something like that?
So Amol, I think if you see like the mistakes or the problems which happened on the NBFC side, it was deviating from a fundamental model of a NBFC. I think the fundamental model of a NBFC was always to originate the loans, okay, and transfer it to the banks. So they should not keep on their balance sheet. But I think in the pursuit of getting more and more profits, and also sometimes of the greed, and when you deviate from the ethics and the normal principle of governance, people were trying to keep everything on their balance sheet, okay, and get the funding from the banks. And I think the whole problem started with that mindset, where the NBFCs originated with a growth of 35% to 40% every year, and tried to keep everything on their balance sheet and getting the funding from the banks. So I think that was something which we need to avoid. And that's why the recent RBI framework in terms of co-origination of loan is something which is very, very good. And I think we need to work together on this. And Yes Bank, I think, is looking very, very aggressively to partner with the right kind of NBFCs, where they have been able to raise those kind of loans successfully in the past, where the behavior of their loans is really good. And I think we would be doing that kind of partnership. But lending to NBFCs without even understanding what kind of portfolio they are building would be very risky. If the overall market is growing, say, 20%, and if a particular entity is growing at 40%, then definitely there is something wrong on this. So I think that we need to be careful about that part.
I mean, yeah, exactly. Because, RBI, though it said that, you bank can partner with the systematically important NBFCs, but the NBFCs that failed were also systematically important, right?
Yes.
So, and considering the people's money, I have also started, receiving questions from the audience, and I will start taking a few questions from them as well. I think this question sounds really interesting to me. So this question is, which areas do banking and non-banking partnerships have the most potential to grow?
So I think as on date, I would be saying if we can acquire customers. So Amol, if you remember during the Jandhan account things, so at that point of time, I think the banks were adding the customers through their brick and mortar branches. There was hardly any digital offering. But today, like if you think like if you have to do the same exercise on a digital media, then I think you just see in terms of the convenience to customer, the speed with which all the banks can acquire customers, and also the convenience. I think if you remember, like the customers were visiting the bank branches, they were producing all their documents. And today you can just digitally open your account, you can do a video KYC, and you are having that Aadhaar card through which you can do the KYC completion. So I think such a country where you are having a huge population, and still like we are talking about large number of people don't have a bank account. So still we were talking at least one account per family. We are not talking about every citizen has their individual account. So I think this partnership, I think, would be the most important in terms of acquiring the customers. So I think that should be the first step.
Okay, I think quite interesting, and thanks for that answer. I think participants are still asking some questions, but let me, get some more insights from you. When I look at the fintech model, yes, they have the great data analytics, and they analyze the risk on their own way. In fact, they're creating alternate credit score for the customers, right, which can be very good for the banks immediately. But that entire model is based from A to Z on a digital platform. My question, which comes from a traditional, background, is this: that what if the customer doesn't pay? Maybe the fintech has all the data in place, but if the customer doesn't pay, how will you recover? Because we have even the corporate cases where the corporate doesn't pay and they just slide, right?
So I think the experience from the individuals is much better than the behavior from the corporates, because from the corporate side it is with a particular objective. But I think when you are having large number of individual customers, your risk is also contained, risk is minimized. And if you have right kind of underwriting models and built on the data analytics, because data analytics also gives you the behavior, the prediction about the behavior of that customer. So I think if you have the right kind of inputs in terms of getting the credit score, in terms of their spending in the past, in terms of their cash flows in their account. And if you build that kind of underwriting model on the basis of all these inputs, the chances of going wrong, I'm not saying would not be there, but chances of going wrong would definitely come down drastically. And you can manage this. So I think any business, you definitely run with a kind of risk. But if you are able to control that risk, then I think it's a win-win situation.
Okay, I will take one more question from the participant. This is specifically a technology oriented on open banking. And the question is, what are the prospects for open banking as a partnership for data sharing for providing more value to the customer while reducing risk and cost? Has India made any progress in this direction?
So I think it's a very interesting question, and I think this is a journey which all of us are moving in that part. So as of now, everybody is more concerned in terms of protecting the data about their customers and would not like to share with others. Just to think like, because if you share the data, there is a probability of that you lose the customer and you lose the business. But I think what we need to understand, that protecting a customer data for a very, very long time is not possible, because the same data would be available to other banks through different channels. So maybe this customer is doing some credit card transaction, making some investment. So howsoever you try to protect that customer from the, say, your competitors, it would be available to them. So I think the best part would be in terms of how to improve your own products and the services. Okay. And definitely then the customer would be free to choose the best out of them. So at least my belief is that it will take some time, but let's make the customer, the entire process and the products centric to customer. Give them the best, and I think they would be able to take that kind of thing. And then in the process, everybody would grow, everybody would get the benefit.
Okay, interesting, Mr. Kumar. So, when at your end, I know that Yes Bank had many partnerships with, in fact, fintechs, new fintechs, emerging fintechs, and all. So, could you also give me a sense on what kind of partnerships are these? Are these partnerships specifically related to commission based? Are these partnerships related to fee based? I mean, how do you actually craft a business model?
So Amol, like there are two kind of things. One would be definitely partnership on the basis of fee, but that would be a very, very small amount. I think the larger interest which we are looking for is in terms of getting a customer, using that customer information within the bank in terms of how many more products you can sell it to the customer. Okay. So the entire partnership would be more in terms of the building the capabilities within the bank and also helping our partners. Okay. So today we are having a technology platforms where we would try to encourage like the companies who would be coming and plug and play kind of a structure. So it becomes very, very convenient for them to come out with the solutions and just to play with our system, okay, and get the benefit. We are also in the process of setting up a technology, say, innovation hub. And in the innovation hub, we would encourage people to come with the use cases and then come out with a multiple alternate solution. So we would encourage, like for every use case, if we are having 8 to 10 alternate solutions, and then we can evolve around them. So that both the fintech partners as well as the bank can do the experiment and offer the best thing to our customer. But this is a ever evolving situation. I think we would be never able to reach to a situation where we would be saying it's a perfect solution. So I think every time there would be something better than the previous one.
Right. There's one more interesting question that I have received from the participant, and this question is: are there any roadblocks, according to you, today that need to be addressed to provide an environment where partnerships in the payments ecosystem can flourish?
Kamal, as of now, what I am
Mhm.
seeing that today it is very, very convenient for like the people, because the mindset has changed. If you see the earlier, everybody after completing the education, they were looking for some service at a good company. Now mindset has changed and people are going for the entrepreneurship. Now in this pursuit of entrepreneurship, when there are so many enablers, like you can set up your own technology team. Just you set up your own website just in a matter of few days. And then getting the necessary approval is also very easy. So there is a risk where large number of people thinking like this is something which everybody can make. So we are running into that kind of risk where large number of people would come out with some solutions, would think in terms of some business strategy, and then there is also a high risk of failure. Okay, so then the success rate would be small. So I think that should
Right.
not discourage the innovation. So I think that is something which is important. And in the process, I think that we also need to segregate between the players who are really serious into their business or the players who would like to make some quick money. So I think that is something which we need to do. But I think there is one more aspect in terms of getting the right kind of regulation around.
Hmm.
So it would be a two-way process where the regulator would seeing the developments in that area and come out proactively with the regulation. But I think at the same time, it's incumbent on all of us to reach out to the regulator, tell them like how the situation, how are the solutions, and would request them to come out with the frame.
When I, look at now the banks, NBFCs, and fintechs, everybody's talking about the partnership model. Uh, you know, Obviously, banks and NBFCs earlier have their own islands, and they were happy with that. But as banks are coming with new technologies and the new emerging technologies. Most of the banks are also talking about BaaS, which is banking as a service. NBFCs are trying to do only one part of jobs. Fintechs are also trying to do some part of job. My question to you, sir, is: are we heading towards the only partnership model? And is the traditional banking over now? I mean, okay, this is a bank; it has hundreds of branches, and they used to do only this much thing. It's over now. Now this is a bank which has hundreds of partners, and they will do thousands of things. Is this the emerging model of the banks now?
So Amol, I think if we just think through this say issue in a different way. So I think as a say, ecosystem, partnership is something which always works well, other than a say individual or maybe a small group of people. So only thing is that we are now moving away from the partnership within bank to partnership outside the bank. So within the different business groups, I think we have seen that wherever there is a partnership within the different business group in a bank, that bank is more successful. Only thing is now we are moving out. We are seeking partnership outside also. So I think if the mindset is very clear in terms of it is not at the expense of others, it would be a win-win situation for others. And I am fully confident there is a lot of room available for this. So I think entire ecosystem give that kind of say potential uh, available to everybody, that everybody can exist, everybody can make money, everybody can come out with innovation, and in the process, not only the entities but the customers would also get the benefit.
So, when you're talking about the emerging partnerships, apart from the typical fintech startups and, the non-bank, what are the maybe future partnerships that you can, tell us? In fact, few bankers told me they're also partnering with Swiggy and Zomato and Netflix and something like that, right? So, what is there on Yes Bank's radar? Who are the new partners that you are going to join?
So our thinking, Amol, is in terms of whether bank as such is a different kind of business. But I think we need to move away from this part. We would like to see banking as a part of the entire journey of the individual's life cycle. So I think banking should not be seen separate. What we are looking at, how we can integrate the banking part in the lifestyle of an individual. So banking would be a very small thing. So I think somebody is not going for banking. Somebody would be going for purchase of an item. Somebody is going to for going to do a creating wealth for future. Somebody is going to go for shopping. Some for leisure activity. And how banking can integrate at the right kind of say I would be saying right kind of time space in their life cycle. So banking should not be seen as a banking. It should be more in terms of fulfillment of the goals of an individual. So I think we are at least in Yes Bank. I am very proud to say that our mindset is not like mindset of a banker. It is more about the mindset of a fintech company.
Right.
Where we always see how we can fulfill the aspiration of an individual in the life cycle.
So, I mean, the lifestyle aspect is a very, very important point, and I'm happy that financial institutions are talking about it. But I also understand that Yes Bank is also looking at some partnerships with upcoming NUEs. So how important such models will be for you? At one side, you are very aggressive in terms of partnering with NBFC and fintechs for the credit system, but on the other side, you are also partnering with NUE. How important these partnerships will be for you?
So, Amol, on the NUE side, I think first all of us need to acknowledge that NPCI has played a very, very wonderful role in terms of integrating the entire payment space. But what exactly is happening that today, if you see the growth in the UPI payment space, I think there is a potential for existence of many such more companies who can be, say, playing into that space of the banking, transaction banking. Similarly, instead of having a plain transaction, I think there is also a scope available for a lot of innovation in this partnership. And that is exactly from the Yes Bank side what we are looking at in terms of creating additional, say, agencies, and also in terms of bringing out the innovation. Okay. So, because if you see, UPI was a simple transaction, but a lot of innovation have happened around that, and new, very, very successful payment companies have come in. So I think what we are looking at, say, having a collaboration with the right kind of people, and that is exactly what we have done yesterday, that with the partnership with the Soham Bharat, Soham Bharat, because I think our, say, thought process are entirely same, and both of them can bring out those kind of innovation.
So, then the immediate question that comes to my mind is when the collaboration is in the right direction, when you find the integration with your new partners is really matching the way you wanted, will you consider acquiring such companies or investing heavily in such companies the way you invested 9.99% yesterday in Soham?
So Amol, what we are doing, we are coming out with our own policies in terms of how we can provide the financial support to the upcoming individuals or some of those entities who would be innovating and would be also collaborating with us. So I think we are coming out with our policy where we can start funding them in some small amount. But initially, our thought process is that the fintechs who would be complementing us in our function, initially we would try to identify them, fund them, nurture them, and take them together. So immediate target is not in terms of acquiring, it is more in terms of developing them so that they can become a very, very important partner in the entire ecosystem.
Okay, thank you, Mr. Kumar. But before I wrap up, I would like to take one question specifically about Yes Bank. Obviously, we had an adventurous ride in last couple of months. Going ahead, where do you see Yes Bank, or what next for Yes Bank now?
So for Yes Bank, I think what we are aiming at, we would like to make it one of the best retail bank, and this retail bank would be definitely riding on its digital capabilities. And we would be today, our customer base is very small. We are going to ramp it up, and we are looking for a customer base of at least 1 crore. And all these customers we would like to acquire on the digital. So we would like to keep our cost under control, have more collaboration, acquire more customer. But the most important part would be offering the best products and the services to our customers on digital platform.
Right, Mr. Kumar, thank you for that note, and thank you for sharing your insights at Digital Money 2020. Thank you so much. And thank you, Digital Money 2020, for inviting us.
Yeah, thank you so much. Thank you so much, Amol, and thank you so much, Digital Money. Yeah.
Thank you, and over to you, Shreya.
Thank you, Mr. Kumar, and thank you, Mr. Dete, for such a wonderful session. A special thanks to our gold partners, Visa, Freshworks, and AWS, our silver partners, Zeta and Paytm, and knowledge partner, PwC. Stay tuned for a lot more.
Moderator, Mr. Madhusudanan R, founder M2P Solutions. We welcome you, Madhu.
Thank you. Great to be here.
And Yes, I would also like to welcome our esteemed panelists, Mr. Abhinav Sinha, co-founder, Echo India Financial Services, Ms. Dipti Sanghi, founder, Kodo, Mr. Abhishek Arun, Senior Vice President and COO, Paytm Payments Bank, and Mr. Murali Akila, Chief Executive Officer, Rational FX. Thank you for joining us today. I would now request Mr. Madhusudanan to please. Thank you.
Thank you so much. Good afternoon, everyone. It's a great day to be here talking about the future of payments. I think as a country, as an ecosystem, we are at an interesting sort of phase where we've had like a decade of rapid growth and all kinds of product innovation that has happened. And we are getting into the next phase of growth, which is aided by a larger sort of ecosystem participation around data and around how some of the good work that has happened over the last few years is going to sort of companies are looking to sort of build on it. India is a torchbearer, if I were to sort of use that term, as far as payments is concerned. A lot of markets look up to India, and this has happened rapidly over the last 4 or 5 years, right? So I have in the panel today an interesting set of analysts who cut across the sort of ecosystem, if you will, right? I'll start with Abhinav, who represents Eco, who's been doing a lot of work on the ground, from an inclusion perspective to having a broader API. And before neobanks became a fad, they have been doing a lot of the neobanking work. So great to have you, Abhinav, as part of the panel. I have the true blue neobank represented by Abhishek Arun from Paytm, who's probably going to sort of talk about and share his experiences. We also have Deepti, who is sort of building out a fantastic product around Kodo, which is focused on the SME, which is probably the next mountain to sort of capture as far as fintech and innovations are concerned. And we have Murali to sort of talk about the cross-border play. If I get that right, Murali, I'll probably let you sort of explain and talk about what you do. Maybe why don't we just go around the table introducing ourselves for a minute, and then we'll sort of get into the session. Can we go with Abhinav first?
Thanks a lot, Madhu, for the kind introduction. It is true that I started Echo in September of 2007. It's been 13 long years, and we've been witness to all the policy regulatory changes that have happened over the last 13 years. And it is absolutely fantastic to see how beautifully payments have evolved in India, and the time is only getting better. As far as Echo is concerned, we are India's one of the largest fintech players who operate in the cash to digital space. We cater to consumers who are low to moderate income customers who are primarily earning and spending in cash. So we kind of take the burden of converting their cash into digital and kind of introduce the digital ecosystem to them. I've been doing this for the last 13 years, and I see this space growing. Madhu, over to you to pass it on to others.
Yeah. Abhishek, if you can introduce yourself.
Sure. So my name is Abhishek Arun. I work with Paytm Payment Bank. So I started my journey with Paytm on the payment side and now moved to the bank. So Paytm, as a lot of people will be aware, is the largest mobile internet ecosystem in the country with upwards of 300 million users and about 17 million merchants. So it's a consumer and a merchant play and a very, very user-friendly app which powers all kinds of transactions and all kinds of pay modes. And look forward to this session.
Great. Deepti, if you can introduce yourself.
Sure. Hi, I'm Deepti. I am the co-founder and CEO of a fintech startup called Kodo. We offer corporate credit cards and vendor payments platform for Indian startups and small businesses. So we are probably the youngest of the lot. We went live with our product in December 2019. And over the last 7 months since the pandemic has been affecting businesses, on the strength of a lot of businesses moving their business online, we are seeing massive traction. We have grown almost 15x in the last 7 months, largely because our payment instruments are helping companies who have set up their online stores to drive traffic using our cards for online ad spends, various IT tools. So businesses basically use our cards for everywhere they need to use a credit card for online spends, and also they use our credit cards for vendor payments. So this helps them streamline all their expenses in one place. So, yeah.
Great. Murli?
First of all, I should say thank you so much for having me here. I feel absolutely dwarfed with the achievements of the other panelists, to be quite honest. I joined Rational FX in February this year as chief exec. My background, when I first started off, I was a developer. I worked with Accenture, and soon decided I shouldn't be one. It was quite dangerous for me to be so close to the code. Then I moved to Standard Chartered Bank in Singapore. I spent about close to 6.5, 7 years there in the global HQ, multiple roles, but mostly on the payments and on the interest rates derivative side. Then moved over to Standard Chartered's London office, where I worked in the private equity side for a couple of years. Then got an MBA, and after that, I joined a firm that one of the alumni from my school had started, TransferWise. At the time, it wasn't the beast that it was. It had close to like 400 sort of employees. So I joined, and I led their banks business for basically starting it, growing it, and sort of building a team around it. That was until last year, end of last year. And right now I'm with Rational FX. So it turns out I'm the group chief exec as well. We have two sister companies. RFX basically helps primarily financial institutions and small and medium businesses. We are an FX firm first and a payments firm next. And therefore, we do spot, forward, and most risk management solutions that businesses seek. We also have another company called Zenpay. This is basically an equivalent to TransferWise, if you will. So we help individuals send small amounts of money home from wherever they are to their destination countries. We were the pioneer of a pricing model in the market called Pay What You Want, and has been featured as a case study in many sort of business schools as well for actually being sustainable. So happy to share thoughts around that as well at some time. But thank you for having me today.
Great. Yeah. So I'll probably spend a minute introducing myself. I represent a company called M2P. We are a fintech and a payment enabling and an infrastructure business. We work with banks on one side and businesses and fintechs on the other side, covering their whole payment products and infrastructure play. We've been around for a while. Prior to this, I used to work for Visa. I was part of the products organization for South Asia and Visa, leading some of the products. And before that, with Citi, all about 15 odd years in experience in the payments business. As Abhinav said, we've seen this. I've personally seen the evolution of the payment business from the way the policies were drafted in mid 2005, 2006 to where we are today. It's fascinating that in one sort of a decade or so, India has sort of transformed in the way how payments business have happened, which sort of takes me to the first question. Abhinav, if I can come to you first, is around the fact that there's this common notion that today, if there is no money in payments, it's a loss leader. But you have operated in a segment where people have never actually, shied away from paying for convenience or getting that service done, right? So it's a very different world compared to the world that we are all in, where service delivery was a lot more important. Timely, credit of that money was super important. How has this changed over the last 5-6 years, or maybe even more, since you can go back a lot more into the time? So is it really a fact that across the value chain you feel that there is pressure on monies to be made in the payment business itself? That could be a good segue to start the conversation.
Sure. Thanks for asking that question, Madhu. First of all, we do operate at a segment, and let me just take a minute again. We operate 80% of working Indians continue to earn in cash, and this is because 80% of Indian economy is built off these small MSMEs and SMEs who work, probably completely or partially in the informal sector. And as a result of which, close to about 400 million people in India get their wages in cash. And so we do provide them basic banking services to start off with, which is opening of a bank account and doing deposit withdrawal. And you're right that, because we provide convenience to these guys, and this is convenience that can be felt. This is this is genuine convenience. And as a result of which, what happens is that there is an opportunity to charge in a few transactions. It's not that all these transactions can be charged to the end consumer. There are a couple of transactions which do open up an opportunity to have a fair kind of a transaction fee income. However, let's say let's say a transaction was a margin of $10 way back in 2015. Probably that's gone down to $2. So it's not that we are not under pressure of margins and things like that. I think it's a similar story, but I think because it's a very distinct customer segment where the journey starts with cash, as a result of which there are a couple of different opportunities here. But largely speaking, large opportunities like cash in, cash out, where a lot of these consumers need these kind of transactions because the market size for these transactions are very big. The margins aren't too high, and therefore one is really need to run the operations in a very, very people-less, paperless manner. So we kind of have this mantra within the organization to be people-less and paperless, and I think payments kind of forces anybody and everybody to be as agile as slim as possible.
Sure. Yeah. Interesting. Abhishek, if you look at how companies have been forced into, just to take on what Abhinav said, to sort of look at adjacent opportunities to actually make money or strengthen the core business itself. Paytm has been at the forefront of trying a number of this. The first to actually get free for merchants, and then you brought back pricing. I think recently you've sort of made it free again. Is this sort of cohesive strategy to build merchant first, get the merchants on board, provide a larger sort of financial marketplace so that you could look at making money at a customer level, or is it still sort of test and learn and evolve sort of phase? Because there's no other company that operates at your scale where you could test many of these in silos and actually get some some modeling around it. The reason why I asked that question is that today, the whole aspect around making money on pure pay payments is no longer the edifice, because a number of companies are coming in, or rather UPI has forced companies and incumbents to actually look at money beyond the payments business itself, right? So any thoughts on that and how you're looking at it organizationally?
So I think there's been a journey here. So there is a journey where payments were standalone, making money. Then payments became an enabler. Today, in some form and shape, payments is also a public good, which the government wants to have a large say in it, whether through UPI or whether through various policy interventions. So payments from a revenue generating source is now part of public policy to impact a larger society. So one is that trend which we should be cognizant of. And in India, large stakeholders and the government, so to speak, realize the importance of payments and the seamlessness of it. This is very different from a lot of other places. That's one. Right. What has also happened in the last couple of years, if you look at it, business models have changed. So business models of people did not understand what Uber's business model was, and if they don't make money, they make money. How will that work out? Those business models on data, on sitting on top of it, lending or some of the other elements have also kind of come up, and those are also work in progress. And the third element is around the ecosystem play, which again has happened in some of the other countries, maybe China, but in India it's again working out slightly differently because it's not a walled garden. At the end of the day, an ant or a Tencent is a walled garden situation, which again can't happen in India. So that change has also happened. To come to your point about whether payments can be profitable standalone, yes, it can be. It depends upon which area you want to play your game in. Is Visa profitable? Of course it is. Is it in the payment space, or is it in the network space? Everybody is talking about that in their own manner. Margins are definitely under stress in the payments business. Payments is not a one or two, monopoly scenarios. India will have 5 or 6 players in the payments business. So in the 5 or 6, logically the pie gets divided. So standalone, you may not make money, which is where associated benefits and associated things come into picture. our journey is started from a payments to commerce to banking to financial services and a whole ecosystem of it, because you have a large consumer base and you have a large merchant base. So you're not really depending upon UPI or wallet or A or B or C. You're saying that, okay, this is the consumer base, this is the merchant base you want to solve. Somebody else could come in and say that I only play the consumer game, or I would only play the payment gateway game. So then there are niches in that particular piece. It's each person to their own in terms of how large you want to play this game, how wide you want to stretch, and where do you want to kind of focus. So I think each to themselves, but very, very difficult standalone to make payments profitable unless you have associated moats available or you own the consumer, because there is some player which is coming every day and saying that, okay, I will offer this at a particular rate, coupled with government intervention.
Yeah. Interesting. You sort of made that comment where we have, we have a lot of companies that are saying we will lend based on the data that is getting generated out of the payments. We've not seen a lot of them scale. Deepti on the other side is lending and then using payments to actually sort of underwrite them better. But do you see any adjacent opportunities, just to sort of extend your thought? We don't see a lot more work around loyalty or any of the other adjacent opportunities operate at scale. Is this a market maturity, or is this a thing that companies still don't believe that there is value? Because if you look at loyalty, for example, beyond Jet Privilege, when they existed, and maybe Shopper Stops to some extent, we don't have a large loyalty business in India, right? And payments is a great hook to get loyalty sort of going. So everybody sort of is gravitating towards lending, but do you see other areas getting the right focus and sort of technology investments to be sort of harvested and grown, or is that something that you guys are trying to do at Paytm? Any thoughts on that?
Lots of options. So, for example, let's pick up something like transit. That is commercially viable today, is positive. It'll probably make as much in an ad valorem percentage sense close to what lending would make with no risk. You look at loyalty. What people don't know is that, for example, Paytm would allow a small kirana store to have his gift voucher only applicable in that particular shop. If that particular merchant wants to send text messages to anybody in that pin code about a promo they want to run, they can buy a pack on our platform. So those are additional pieces which people don't really are aware of, because which generate subscription revenue, which is the classical SaaS model. And what we need to also understand is in the last 2 years, as the VCs keep changing and meandering from lending to SaaS to API banking to banking as a service, people's conversations change, but essential business remains the same. So you need to figure out which client you want to serve and what's your moat and what is the value add. But there is a narrative which keeps changing depending upon what's the flavor of the season. The flavor of the season today is corporate credit card. So every merchant is trying to do a corporate credit card in partnership with some form and shape. Merchant cards. It's not very easy. The challenge, the other point which nobody asks is scale. It's very difficult to scale, and this entire conversation, I'm actually moving to the next part, which is this entire conversation about fintech working with banks. The fintechs bring in their risk parameters and their understanding. The banks come back and say that I have the distribution power, so I should get all the benefit. It becomes very difficult. How do you scale? So unless you have scale in lending or corporate credit cards, some of these things, it becomes very difficult for new age players to scale, because it is tilted in the favor of bank. We are a bank, so we do know that what's in our favor, and we have what licenses we have, and how difficult is it for a very, very smart entrepreneur to come in and say that. So the question is, who owns the customer? You have a neo bank, you have everything, but who owns the customer? Who will cross sell? So if you're acquiring and if you're building distribution for a bank and then handing over the customer and making some money, becomes very difficult.
Yeah, true. Yeah. Diti, if you want to sort of give your perspective in terms of how you're looking at lending and then leveraging the payment data that the lending stack generates, how are you thinking about it? What are you seeing as early traction, and how are you building this for the future?
Sure. So when I look at so credit cards, right, are basically bringing the best of credit and payments in one instrument. And when I look at credit, I'll view it as grease to let the business payments flow seamlessly, right? And I mean, that's the hat I wear when I look at credit. Now, if you see how this ecosystem has been evolving, there's a lot of work that's been done on the acquiring side of the business, right? So be it physical POS or merchant acquirers like Pine Labs or now Paytm or Bharat Pay, and in the online world, all the payment gateways, right? So they're making it increasingly easy for businesses to accept non-cash payments, right? And of course, there has been, I mean, even though a large part of the economy is still cash, but there is a trend, which I believe is there, driven by a lot of events like demonetization, GST, and now the pandemic-related, fears around cash. There is, like for example, there is, a family friend who runs a retail garment shop in Roorkee. Told us that pre-pandemic, about 30% of the business was through cards, or basically, let's say 70% of the business was in cash, right? And now 30%, that's gone down to 30%, right? Because people want to pay through, let's say, a Paytm or a Google Pay, etc., right? And so now on the acquiring side, as the businesses are getting formalized, on the payment side, right? Now, if the business has to make payments, that is where earlier they would love to pay by cash because they're getting paid in cash, right? Now they need to find the right instruments to pay in a non-cash way. And as a business, requirements are shifting more towards places where you need a card instrument, let's say for buying office supplies or let's say raw material on online platforms, or let's say even for your online spend, subscriptions. There, the need is rising rapidly. Now, and that's where, and let's say, let me give you an example, which may not be the right thing in the current environment, but as the travel restrictions open up, that will be super relevant, is that earlier, these businesses were using travel agents to buy their travel ticket, and they would pay them after a month, and they would get that credit period from the travel agent, right? Now, a lot of people find it much easier to just book tickets online on a Clear Trip or Make My Trip. Now, they still need that credit period, right? Businesses always run on managing their receivables and payables. So a credit card is a beautiful product that offers them without any interest, right? So that is how I see that, when you look at business payments, credit has to be embedded into that to help them manage their receivables and payables. And when it comes to, it's not just that, okay, just giving credit is not enough, right? So when a business makes a payment, there is a compliance exhaust that comes with it, right? Around the TDS that you deduct, the GST that you're paying, and then making all those tax payments. So all of that has to be, and the accounting entries, right? So it's not as simple as a personal credit card where you just make a payment and you're done with it, right? So there is a need for building all of these compliance tools around every payment that a business makes, right? So that gives one a lock into, and that gives one a lock into helping them manage all their spend side. All the receivable side is being managed by, you can look at payment gateways and POS providers. And the spend side is still something that is yet to be solved for, right? In the rapidly evolving dynamic that we have. And when it comes to credit underwriting, right? A classic thing like a credit card. When you speak to any underwriter, they see that, hey, I want to see the end use of my credit, right? I don't want you to go and speculate in the market or real estate or you have to have a legit end use. Now, credit card allows you to track that, right? So it's also a risk management tool in that sense, right? So that makes it very powerful.
Yeah, interesting, because India, a larger credit card, while credit, we are not underpenetrated. Credit card as an ecosystem on the consumer side, we are super underpenetrated, like topping 40, 50 million consumers. The corporate side of it is even poorer, right? So it's not even as a product exists. I think collectively between the large banks, we probably will have like 100, 200,000, corporate credit cards. That opens up a large opportunity in light of what's happening at a sort of public good ecosystem level, changes that are happening, whether it's GST, the data footprint that you have around that, or the OCEN framework that is sort of coming. We'll probably sort of touch on that. I'd love to hear your thoughts around that as well. I'll now probably sort of look at the cross-border play, and want to get your thoughts, Murli, around how you guys are looking at FX, and the fee incomes associated with the FX is one of the most profitable sort of channels as far as banks are concerned, right? And disruption in this space has been sort of playing out for the last 5-6 years. I think TransferWise and the likes who kind of took the first chip. And it continues to evolve in markets in different sort of forms. There is a B2B aspect to it, there's a consumer aspect to it. In a market like India, which probably receives 80-90 billion dollars, the profit pools in itself is like is in the range of $3 or $4 billion in terms of cross-border money flow on the consumer side. So what changes are you seeing, both from a consumer habit standpoint? Are people willing to trust a low-cost sort of channel vis-a-vis a bank channel? Because when I send money from, let's say, my DBS bank account in Singapore to my ICICI account in India, I know for a fact that the money is safe, right? If there's an online platform that sort of does a Google ad and shows me a platform that saves me $10, are consumers ready to take that plunge, right? Because that's the is that trust factor, and how is it playing out? Would be curious to know.
Yeah, I think I'll echo the words of Abhishek. I think who said before, we don't have a choice. Like the more digital we become, the more app-driven behavior consumers tend to exhibit. I think trust is almost like they will trust you with initially small amounts of money and then scale it up later. But then once you do that, a very dangerous thing happens, right? I mean, do you remember how much you paid for the first app that you ever bought on that lovely touchscreen iPhone? Must have been $10. How many apps do you even pay for today, right? I mean, 90% of the apps on your phone are free. Why is it any different if someone's moving your money from one place to another? So what we're witnessing is an absolute need and a market trend of price sort of deceleration. It will come down massively, right? There is no way out of it. The only thing is people who are able to wade through and survive that whirlpool of price compression, those are the guys who will survive. That brings me to the second point. You can reduce prices with several ways, right? I mean, you can either rob Peter to pay Paul from your VCs, or you actually innovate on operating models, right? I mean, and there is so much scope to do so for cross-border payments. I mean, until 2012, 2013, I think almost 90% of the cross-border players in the world were still using SWIFT, right? The age-old method that was conceived and developed in the 60s. Frankly, from then to now, in the last 8 years, we have seen huge amounts of innovation in how, money movement mechanisms have evolved cross-border, whether it be for pay-in, whether it be for FX execution, back-to-back hedging, transaction monitoring, fraud discovery, sanction reporting, everything, and that basically led into the last culmination, if I will, of the TransferWise model, which is the local liquidity pool method. Basically, it's Hawala, but massively regulated, legitimate, and safe. So it's like you pay if I'm sending my money from my Monzo account to your account in ICICI. TransferWise, for example, takes money from my Monzo account into its GBP account, then takes money from its INR account, wherever it's sitting, and sends it to you in ICICI. Now, both these are local payments on both sides of the fence. They're cheap, super fast, nearly instant, and they're incredibly convenient to use, right? So if those three are the product pillars on which you base your operating model on, you obviously are going to see a massive improvement from the previous models. So the operating models are slowly becoming extinct, and that's, I think, a ripe area for bank fintech partnership, which is probably where I also differ with Abhishek, because who owns the customer is important, but which bank has the ability to spend years going out and opening accounts in 30 odd countries, right? When somebody else has done it for you. So I'd rather think of it as a bank can probably say, I don't want to build the pipes, but I want to build the rate at which I'm monetizing my customer base. Depends on what they are prioritizing. And then the last bit, I think, which you asked for. Look, I think money movement is becoming a commodity everywhere, which means that everybody needs access, both customers and the market players. Around the world, like in Australia, in the UK, even in the US these days, non-bank FIs are getting access to previously concretely held systems, which are like clearing. like having access to the faster payment scheme, having access to BSB in Australia or to NPCI. These things are like super important where, please conduct tests, right? The regulator should conduct tests of fintech players to say that they have depth of liquidity, they're resilient, and they're like solid enough that people can move their money through. But they should be given access. The more you give access, the more you will enable the first part of the conversation, which is in essence price compression, but at a better service point. I mean, these are trends that the entire industry is seeing. But unlike I think most of the innovation these days in the domestic space, cross-border, I think we're still in the thick of it, in the middle of it. There's so much more of the movie to play out.
Interesting. I think, Aditi, do you see this, need? And India is one of the most difficult markets to send money out. There's so much of paperwork. There is regulations that are around it. Do you see a demand that is coming from SMEs whom you sort of cater to in terms of simplifying that whole process? And I'm just dipping into what Abhinav started with, where people are ready to pay for convenience. Today, an SME is lost in terms of how to get a very simple thing done, right? If I have a sales guy, working somewhere, I just need to pay his payroll. It's a challenge and nothing but a miracle to have that processed, in no time, month on month, right? Do you see this demand coming from the segments that you cater to?
Yes, we do. So, for example, like I'll give you an anecdote here, right? One of our customers who sells online on Amazon in the US, right? So they needed to make some payments to Amazon for packaging their stuff. So basically, they sell the stuff, they send the stuff from India to there, and there they have to get it packaged in Amazon's warehouse. For some strange reason, Amazon does not allow credit card as a payment mode, or maybe because of that, there's a cost attached to accepting payments on cards. But they don't accept credit card for that particular payment, and they want it to be paid directly, right? So these guys came to us and said, "Hey, can we use the credit card's limit to pay them?" And we did not. That requires a lot of paperwork with the banks to get that going, right? So what our vision is to help businesses move all their spends on our platform. Now, when it comes to cross-border payments for businesses, that becomes tricky because of all the long forms, etc., that need to be filled in. So on a credit card, you can pay, right? But if you're not using the card platform, then it becomes hard to pay. So that's a little bit it'll be great if that can be streamlined in some way. But I guess right now it's difficult given the regulations.
I think we are in the last few minutes of the conversation. I'll probably take one of the audience questions to Abhinav, where there is, and I'll also sort of color it with my own sort of question that I had. Abhinav, you've seen a lot of the customers, and you've been operating in a segment where you sort of evangelize the assisted sort of commerce play, right? So people who came to your outlets for doing one service, you ended up offering them a lot more. Do you see the same habit forming thing happening there? Is it allowing consumers to move away from a cash sort of model to something that is there on their phone? Are people even experimenting it, even if if it's an assisted mode? Is there a shift in habit that you're seeing, because that will then allow them to do it by themselves at some point in time?
Sure. But again, I'll reiterate, this shift is going to happen.
Yeah.
It is a matter of time, and it is, I guess, rather than organizations like Echo continuing to. So we are taking a step back. We are no lovers of cash. Rather, we want to help people who are earning in cash to actually get certain, transactions more digital. So the way this particular space has evolved is with assisted transactions. And if you go back about 3 years, what we used to witness is that not more than about 30 or 40% of people who would walk into our stores had smartphones. So even creating user experiences over an app was very difficult for us. But that's not that's not true in 2020, right? And as a result of which, I think I can't, just by having an app experience or getting them to do things themselves, do not change the mode in which I get my wages. So they may continue to get their salaries in cash, and that's a different problem that one's got to solve. How do you convert salary payment from a lot of these MSMEs to their to their workers digitally. But let's say if they do get cash as salary, how do you kind of motivate them to rather than remitting them? Imagine you kind of cash into a bank account, but with neobank and all the opportunities open today, you can actually cash into your bank account and then use a far more sophisticated experience on your mobile phone to kind of remit the money and then start using other payments and modes, etc. So, as far as Echo is concerned, our positioning is that while we continue to do what we do, but I think we definitely want to play a pioneering role even in the conversion of this user behavior. I think all the pillars are absolutely there. There's been certain amount of hiccups because of demonetization and COVID, which probably in total probably has taken pushed us behind by a year and a half, specifically for this target segment. But I think this is an eventuality. This is going to happen. It's just a matter of time where people will start to innovate in this direction.
Fantastic, fantastic. Abhishek, if I can just get your closing comments on where do you see the payments evolve in the next 5-6 years? You touched on a number of things in your earlier comment, but 5 years out, if I have to zoom out and see how is the payment business going to look like? Do you have like a bird's eye view on that?
So, I'm no oracle versus whatever happening, but whatever I'm seeing in the market and the way things are, one is mobile, which is already there. That is going to be the starting point and end point of any and every transaction. I don't think feature phone is where the world would move to. It will be feature phone actually moving to smartphones, and the cost of smartphones will come down, and infrastructure will go in the phone direction. So that's one clear direction. The second is cards are passe, so tokenized versions of everything will happen, and that is going to take things forward. And funding sources. So when today we call a funding source from a payment gateway perspective, it's either a prepaid, it's a credit card, debit card, net banking, UPI. Those are the funding sources. You will start seeing funding sources from line of credit to even possibly a fixed deposit line as a funding source. So the funding sources concept will dramatically change from what it is today. Increasingly, payments company will evolve to say that they are technology companies, they're not payment companies. So fraud management, risk management, those or business, like you talked about loyalty, those things will become very, very obvious. And it'll going back to basics. So something as basic as reconciliation, which everybody has offering today, but reconciliation across multiple. So there is a payment gateway, there is a POS machine, there is a QR code, there is cash which is getting deposited, there is a bank account. How do you get reconciliation? And then there is a corporate credit card and so on and so forth. How do you get reconciliation across some of these things? So that this is the going back to the basics concept that everybody says that reconciliation is the first thing, but it is still very complicated. So going back to those basics will be where things will progress. And just like domestic money transfer is becoming ubiquitous and very simple and people don't worry about it, I think the international side of it will get added to it from an Indian context perspective.
Interesting. I think we have a business that operates in the Middle East, where we see exactly what sort of Abhinav articulated, and I can see Abhinav, Mulli, and Abhishek to some extent. All of these platform play coming together, where the consumers are getting blue collar workers, their payroll coming to a digital account. By law, they have to get it a prepaid card. And it's fascinating. Those consumers are actually adopting to pushing that money back to their families, directly from the mobile, which until like a year ago, they used to queue up into a UAE exchange or one of these counters to actually deposit. They used to get, I mean, for the last decade or so, they've been getting it in the prepaid card. What has shifted is that people would get the money into their card, they'll go to an ATM, withdraw that money, go hunt for the best deal in town, right? Every Friday, you'll have these blue collar workers going around town figuring out where can I get the maximum sort of rupees for the every dirham that I send home. And they used to if there are like 5 people from a village, it used to go as one transaction because they could hunt for a larger ticket size in a deal, right? It's fascinating that in less than a year that has actually moved to the mobile. People are now actually seeing rates from different players and originating the transaction. In many ways, that's what happens even in the domestic money transfer space, right? Where they get the salaries in cash because there's no overarching regulation to be paid into a bank account. and they just go, value hunt and send that money from wherever they are sort of most comfortable with. Right? That transition is happening, and people are already, and it's fascinating that whatever a white collar worker could get as rates and competitive offers from a platform like TransferWise is already percolating down to somebody who's sending sub $100 in payments or monies back home almost immediately, right? I think we had like a great conversation. I think
Just one last point I want to kind of add to this particular piece, which is this about regulation.
Right.
What has happened with Ant recently is also a messaging to the entire world that who do you light touch, full touch, what kind of regulation and what kind of connection you want with the regulator, and that's something which in the next couple of years will change dramatically. A lot of players are outside of the ambit of the regulator, and we're talking about working with banks or supporting banks and working with that particular mechanism. It's not going to be the case. So if you are working with banks, but you are a serious player, a substantial player in the financial system, there is a very high chance that you will be brought into the regulatory world. So a lot of us will need to be ready for that particular piece. We've been enjoying some arbitrage because of it, and we've been crying hoarse about the fact that we don't get the same benefits as a bank or other people do. But I think that change is also happening, which will also be very interesting to see in the next couple of years.
Yeah, I think Gateway is the first one to sort of come under that ambit. I'm sure the other segments, other ecosystem partners will have some kind of regulations coming up. Yeah. I think we are completely out of time. We couldn't do justice in 40 minutes, but I think we had an interesting conversation with the panelists. We're completely out of time, so we'll probably sort of wrap here. I just want to thank the panelists for their insights and the time over this conversation.
Thank you. Thank you, Madhu.
Madhu, you were great. Thank you so much.
Thank you to all the panelists for being a part of this amazing panel. And thank you to the audience for those questions to make this session so interactive. We will soon join you with another session shortly. Please stay tuned. Thank you.
All right. Thank you.
Digital Money 2020 powered by PhonePe. I would like to welcome Mr. G. Padmanabhan, Senior Consultant, AZB and Partners. Shri Ravindra Pandey, Deputy Managing Director, Strategy and Chief Digital Officer, State Bank of India. Mr. H. Sri Krishnan, Managing Director and CEO, Jio Payments Bank. Mr. Naveen Surya, Founder and Director, Soham Bharat Digital Payments and Chairman, FinTech Convergence Council. Welcome to all of you. Dear delegates, please keep asking your questions in the chat box. The panel may pick a few and answer to you in the end. Over to you, Padmanabhan, sir.
Good afternoon. Welcome to this panel discussion on the new umbrella entity framework. And the topic itself is very interesting because we are talking about reimagining the role of private players in the payment system on account of Reserve Bank of India announcing about its intention to license more umbrella entities. So when I read this caption, actually, I was reminded of the famous quote of Alex Greenspan, which keeps getting quoted in many seminars, which said, I know you think you understand what you thought I said. So instead of saying I said what Reserve Bank of India put out, but I'm not sure that you realize what you understood is what Reserve Bank of India meant. We really do not know. It is also very interesting because this is one area where probably the market expected Reserve Bank of India to come out with a new policy guidelines in such a sudden manner. Why so? Because if there is although the retail payment system of India is well known, well respected, if there is one big brand that the whole world talks about, it's the UPI, which is being run by the National Payment Corporation of India. So when the volumes had gone up to this extent, when things were going on very smoothly, the Reserve Bank of India suddenly, let's say, astonished the market or surprised the market by coming out with its intention to permit new umbrella organizations to usher in probably the competition and innovation in the payment system. It is also not often that a person like me participates in a similar seminar, same topic over and over again. This is probably the third or the fourth time. I know myself, I know about Naveen, both of us are participating in a seminar like this because it has evinced so much interest. With me on the panel, as I introduced, three eminent personalities, probably people who would soon be the promoters of the new umbrella entities if that happens. Uh, so let's try and understand or demystify some of the issues that, or some of the thinking that Reserve Bank of India had in this manner, and try to see that what we can expect out of this entity. So to start from the beginning, uh, do the panel members think that there was really a need for more umbrella organizations? Why it was thought necessary? And do we think that we are going ahead in the right direction of having more umbrella entities in this in this country? Let me start with obviously the biggest stakeholder in this whole game, Mr. Ravindra Pandey. Your thoughts, please.
Okay, thank you very much, sir. In fact, you have very aptly summarizes the predicament with each one of us has. So let me clarify. As of now, we are not clear whether we will be coming with an NU or not. But then, like all other banks, all other big players who just take into the market, everybody is evaluating things. Now the question comes: we also deliberated internally whether we need a national umbrella entity or not. I would like to park into two. One most important, I feel, is the saturation of innovativeness in NPCI in the absence of a large, though there is a diverse shareholding, but it's not a question of larger private player participation, which brings the fresh air into the market. And this inculcates the competitiveness into the payment space. And obviously the concentration risk, there are two theories of a concentration risk. Somebody says that, okay, if the one more entity will come, it is again a concentration risk. So what is a concentration risk? That is it 20% concentration, 50% concentration, or 70% concentration? It's a question of perception. So more than a concentration risk, which can be very well ring fence, I think probably it is the innovativeness and the bandwidth. Most important is the bandwidth, the management bandwidth to wade into the new areas, the management bandwidth to think into the new area. And as always feel, it is the competition which brings the best out of people. So that's my take on this issue, sir. And these are the overarching principles.
Thank you very much. That very interesting. But let me say this. I think this concentration risk is something which has been discussed several times. And one of the issues that often get discussed is that when we are talking about concentration risk, are we saying that the systems in NPCI are not robust enough? I think let us demystify this upfront. We are not saying that. All that we are saying is that today, when it's a rat race between the cyber criminals and systemically important payment systems or system-wide important payment systems, what we need to be conscious about is, irrespective of the number of backups we have, forget the concentration risk for some time, we need to ensure, and this is something which got discussed even in the Basel Committee, that we need to have what is called dissimilar backups, because similar backups can get hacked very quickly one after the other. So one of the thought process could be that a new set of organization with a new set of architecture, does it bring this improvement on the table? This could be a thought process. But anyway, let me hear what Naveen has to say.
I think, like Mr. Pandey and you clarified that, I think the way you clarified that this is not as much about concentration risk of having one entity doing a particular activity and being extremely successful about it. Because if that was the case, then as you rightly said, it's a technology solution you're looking at. I agree with Mr. Pandey's view on real opportunity here. The size of opportunity and a success of what NPCI brought to the table has actually encouraged probably for us to look at that, how do we grow the number of users who are using digital payment from, let's say, 100 and 120 million. That number keeps varying. Sometimes you hear even 150 million, but you're talking 10 to 15 crore. The reality is that we need to be a digital country. This number has to be somewhere around 500 to 600 million. Now, same way, 18% consumption in digital. even though it is grown during COVID period, but again, the retail part, physical part is completely missing. So when it comes back, where are we? The reality that again needs to go to 40-50% digital. If we depend on a one thought process, one institution which has done amazingly well, it will be actually burdening that entity with too much to deliver in a shorter time. Even if we grow the way we are growing currently and just the same ecosystem working the way we are working, I think to reach the goal of, let's say 50, 500 million or a 50 crore plus consumer or 40-50% digital consumption will take easily 2.5 to 3 decades. But if we have about 4 or 5 right set of a player with coming with the fresh air, as Mr. Pandey said, with some interesting idea, also looking at some aspects of de-risking in a different way, probably we could do that journey in a next a decade and a half. Probably that's a thought process that is very much possible and that is required for our country to be digital.
Yeah, Sri, please come in. Just give a focus to this particular point which Mr. Pandey made is that, see, one of the issues that probably Reserve Bank started worrying about is that, are we doing enough for the innovation? Is innovation possible at all in a monopoly situation? Is it something that we need to bring in competition to make sure that this innovation happens? Because as time went by, uh, whether we like it or not, the market started discussing that whether what exactly would be the difference between an umbrella organization, which is expected to work with a sort of a hub and spoke model, where I think you allow the policy of live and let live so that innovation happens, than a more of a centralized model which NPCI became. So what would be your initial thoughts, Sri?
Thank you, Mr. Padmanabhan. First, two disclaimers. You did allude to say that, we are, in the process of probably creating or joining this race. I would like to clarify that, yes, just like everyone else, we are evaluating and the opportunity. The second is that, NPCI, the way that, they have progressed and come up to this level is very, very, very commendable. On the other side, I think, I would go back to the question that, you were asking me. In addition to the de-risking, the concentration risk part, Mr. Pandey said, and also the fact that the innovation part, that was coming through. I think we'll have to look at it into two parts. One is that how much of market coverage has been already achieved, and what is the balance in the pie which is really left. The balance in the pie is almost like 80+%. Now, what it requires is the scale. Now, in this particular area, which is payments, this is absolutely high volume and low value kind of environment, which requires enormity in terms of the infrastructure that has to be provided in the backend, and also the ability to kind of provide very, very high, unbelievable kind of TPS when it comes to the delivery and the ability to be real time. The de-risking is not necessarily to kind of look at the concentration risk. The de-risking is in terms of the risk and fraud control. The de-risking is in terms of getting real-time systems end to end, because not necessary that one side of the one leg of the transaction is like completely real time, but the rest of the long tail is all completely batch. Now these are all some issues which are there, and I think bringing in more players who have the ability to look at this as long term and not necessarily, while this is prescribed by the Reserve Bank as a for-profit organization, but really speaking, all of us are pretty much aware, being in this game for a long time, that this is not where money spinning kind of a story when it comes to the umbrella entity. So there is a ecosystem development commitment that has to come from whoever qualifies. Now, de-risking from progressive thinking, such as what RBI has come up with, now there is no real answer, correct answer to this, to say that would 2 be done, which is then reducing it to 50%, or would 3 entities be there, including NPCI, that reduces the risk to 33%. Now that way, then all of us could have been having only 1 or 2 banks in this country, and there is no necessity for the multiple banks which expanded, and then there is also a consolidation. So this is a cycle that every country goes through, every kind of product and business vertical goes through. So I think to answer your question, Mr. Padmanabhan, this is very clearly progressive. This is very clearly to look at innovation. Technology changes very rapidly. there is scope for a lot of improvement when you start ab initio, rather than having to kind of look at changes within the existing organization, which NPCI is doing a tremendous job. They are also looking at all kinds of innovative technology right away. But then what happens is that the baseline, what you have started with, and the way the opportunity that you can disrupt the market with something which is like starting ab initio, and with the technological advancements that are taking place, the opportunity is enormous. So that I guess would summarize from our side.
Excellent. I mean, that naturally brings me to the second aspect, because when you say that anything like this cannot be a money spinning proposition, completely granted, because I don't think in any country, any infrastructure which is a public good infrastructure can be money. But I would hasten to add that nor it can be provided free of cost. So we have to find a balance somewhere between the money spinning proposition and the free of cost proposition. Having said that, what would be the ideal model? Because if we are talking about, let us assume two scenarios. One scenario, the same set of banks or different set of banks come together, they set up a new umbrella organization. Would it be a new NUE or would it be NPCI 2? Or do you want different set of players, the private, public, the fintech, the banks combination? So I would like to run this question past each of you. What would be your thought process in terms of what would be the ideal model to achieve whatever we said or we agreed would need to be achieved, and what Reserve Bank of India is looking to? I think for this, let me start with Naveen for a change.
So, sir, it's a very interesting question, and I think there's no right answer again here, that whether the same set of a player or a new player. I think the answer is what are we bringing to the table. I go back to the word you used, innovation. That the answer? I would say innovation combination with market expansion, or innovation leading to market expansion, is what we're looking at. Unfortunately, when you use word UPI innovation, then we're still looking at a set of customers who are already banked. On the other hand, IMPS, which was the first innovation, which actually expanded the market, we don't even talk about it. So that's a reality. Now, the question is that what kind of entity you set up? If I talk to today's generation of a fintechs, and again, we all know that the last 2 decades growth in fintech that has happened from probably 35 to 35-year-old kids, and who have done amazing stuff in the country. And all of them are working with bank as a partner. Like Sri said, that sometimes you have an advantage if you're starting taking what it is as a today and as a reality. If there is an ability for a player to do that with the thought process of a customer, which is of a future customer, they seeing it from their eyes and actually involving all of them. And again, with the segment which is not yet served, that is what is really required. If you're whoever entity you are, whether you're the same structure or a new, if you're going to go back to the same set of a customer, if you're going to go back to the same ecosystem with very similar product, whoever you are, I don't think it is worth doing it. I think as Sir said, it's all about creating new white spaces, or rather identifying new white spaces, filling them up, going to the new segments, making use of most advanced technologies which are going to be there for next 20 years, and to the customers of future they are expecting from you. And when I say future, I'm not just looking at urban India, the top 2% of the consumer. I'm actually still talking about right up to a Kisan credit card kind of a customer. Even there, the segments, even their thought process. And I always say the payment inclusion issue is not geographical issue. It's actually demographic issue. So can we get the middle of the pyramid in businesses, in consumer, served by the solution that we're going to offer? Now, who serves and who can go there is still an open question. That's probably our way to figure out.
Yeah, I want Ravi to have the last word on this. So I go back to Sri and ask him what is his view before I move to Ravi.
Sir, I think you will have to look at it, and I would like to take Naveen's example of the pyramid. Now, if you look through the adoption today for digital transactions, more on the financial services side, top of the pyramid, which is the top 50, 60 million net savvy users in the country, mobile savvy users in the country, are the ones who are doing the round robin in terms of multiple transactions. If you look at the bottom of the pyramid, the opportunity is huge. Now, what it requires is is the infrastructure that is merging quite seamlessly with other ecosystems. For instance, whether it is the healthcare ecosystem, or whether it is the education ecosystem, or whether it is something to do with the retail ecosystem, and so on and so forth. So what happens here is that while products need to focus on the adoption where it is abysmally low, on the other side, I think it is also to be very seamlessly provided, given the fact that the infrastructure in other verticals, like the ones that I had mentioned earlier, are actually growing very fast. So I think it is a convergence at the end of the day. So to me, I would go one step even ahead of what Naveen said, not just the mid of the pyramid. I think even bottom of the pyramid is where I think the opportunities are very, 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 very high. And the reason for this is very simple. I do not think that anyone taught in the rural areas and the first time mobile users to actually play a YouTube video. They just taught themselves. They just started watching movies themselves. They started listening to music themselves. So as a result, what happens is that adoption is not through learning and awareness. It has actually become a need part of life. If we are able to create some things like this, we believe that that is the real opportunity that this umbrella entity should be focusing on, and goes back to the same point that we debated earlier, sir.
Completely agree with you. Your YouTube example is excellent, but with a caveat that YouTube does not require 20 documents to be given to start using YouTube. Over to Ravi.
Okay, thank you. Mr. Padmanabhan, I will go back to your earlier question in terms of what should be the right set of people. I think I will take a cue from Mr. Naveen Surya, and that it's a value creation. Ultimately, it's a value creation. And thanks to NPCI for having an idea about the white spaces. I put it that NPCI would not have been there. Probably the idea of the white space would not have come. So the participant, what we look at, I personally look at, the participant should be who can create value for the system. Innovation, but innovation with an aim. But sometimes innovation without skin in the game is not going to help, because any innovation has to be commercially and economically viable and scalable. The problem in India is we are in a very, very small percentage of our population are digitally savvy, although they're digital transactions, even by any standard. So the pie is going to be very big. Once the pie is going to be very big, we have to have an idea. Innovative product should be able to cater to the masses. I fully agree with Mr. T. Krishnan. Target is even the RBI target is also to the retail payment ecosystem down up to tier 6, 7, 8 cities, whatever we call, absolutely bottom of the pyramid. Offline payment, with RBI is implementing an offline payment. Can we do it? So it's a question of, it's a group of, it's not a question of diversification. I pick somebody, everybody picks not. It's a question of like-minded people, like set of culture, like stake in the business, coupled with the innovation. Then probably is going to be the click for that. There is not going to be much money into the system. Very rightly, Mr. Krishnan has pointed out. It's not going to be the money. It's a question of stabilizing the ecosystem. And being a banker, I'm 100% confident when the ecosystem stabilizes, it expands, there is enough money for everybody. We have to wait. So there has to be patience among the partner, commitment by the partner, and will and yield for a long-term innovation sustenance to create this entity a really viable and also that is sort of mix would be a good mix. Private sector, tech innovators, fintechs, payment service, they're all name in the entire ecospace. Most cultures, etc. If you have best of the companies sitting together, do not have the same culture subset, it is not possible to see. So it's a combination of, it's a real marriage, long-term marriage, and not somebody who chips in after 5 years, creates a value and goes out. So it is not with somebody looking this NU as a value creation, as on a valuation game. This is not that game. So that is what the partner should be.
So basically the big message you are trying to say is NUE, investment into NUE is not a PE game. It's a long-term investment that we are looking at. And it should be those kind of entities who would be able to do that, who would be the ideal promoters as far as this is concerned. That's a hidden message or your message I'm getting from whatever you are saying. Let's move on. I think there are 2-3 issues that again the market keeps debating. What's the kind of products that this new entity is likely to be allowed to handle? I mean, let's park this question for the time being. What's the ideal number you think is necessary? I will certainly come to that question at the end. But what is important is that the questions keep asking, is it UPI? And I will be allowed to run the UPI competing against the NPCI, or I will be allowed to run a UPI similar to UPI product with a difference I bring on the table, or is it going to be a completely different product? That's one part of the issue that market keeps debating. The second issue is related to today, when we are talking about fintechs, I think they straddle across sectors. So are we going to limit the play of this new umbrella entity to just payments, or are we going to go beyond payments to some of this P2P lending and things like that? And the third, more aggressive, people ask the question whether we are going to look at even cryptocurrencies. That's one part of the issue that gets debated. So I thought it'll be interesting to get the perspectives of you people on this subject. Let me start with Sri for a difference again.
Thank you. I think, to answer your first point, larger the participation, I think it is better for the economy. So that I think is a very, very key element in this. And the framework defined by Reserve Bank of India definitely allows that to happen, whereby they have created a framework in terms of what all could probably go into this. And I would like to say that this is just the phase one. And within this, the one piece that all of us get colored about is that UPI becomes a flagship or some kind of a milestone for the new umbrella entity. I think we need to forget about that. UPI has done great. They are probably the one of the best innovations so far India has seen in the payments world. Having said that, UPI is there. UPI will continue to grow. There has to be something else where it is interoperable with the existing UPI and interoperable with the rest of the other payment systems. I think that is the key to this. So the first part of what you asked is that definitely the innovation has to come in, but on the other side, larger participants. NPCI's participation, because of the equity and the pattern that they started with, and they have expanded this significantly. I think the bank participation has been assured, but the rest of it is not assured, and which is where the 80% of the market lies. So we need to bring them together. The second part of this is that whatever you were asking, whether or not which one is the right configuration, whether it is going to be the fintechs, and where is the real flow going to come from, and so on. That is a discovery that this new umbrella entity or entities have to do, because this discovery has to happen. And I don't think that any of us have had a time to think through on products. We broadly know that what are the opportunities, but on the other side, to kind of convert each of these use cases into very, very deliverable products and services and value and a disruption to be created in the market is a long-term, kind of an effort. It's not going to happen in the 1 or 2 months of thinking, that we have done. The third part is related to whether it will lead into some kind of, virtual currency and so on. To us, it is very premature. That I think is subject to a whole lot of regulations, not only in India, but around the globe. I do not really want to kind of even think through that could be the end game in this. Having said that, whatever that we do, we need to define that end game. And yes, as long as we have created the provision for that, I think that will do for the time being. So I don't think that we would want to kind of really pay attention on the third part that you just said, Mr. Padmanabhan. If that kind of summarizes what I.
Thank you very much, Ravi.
Sir, one thing is there that whatever the NU products come, it has to be interoperable with the all NUs, not only in NPCI. Suppose 2 comes, because any product has to be interoperable. And I fully agree with Mr. Sri Krishnan that I don't think people have the time as of now to think of the product. We can think of probably the wider perspective. Rural remittance, cross-border remittances, things like that, just very, very ballpark, they're very ballpark ideas. They do not have able to construct the product, design the product. It is too premature. Probably with the time go, because the digital is one word, what is today current may be an obsolete tomorrow. Maybe we are, like your third question, we are talking of cryptocurrency. Maybe today we are talking of, day after tomorrow, maybe it will be something new would have come, which is much better, more exciting than this. So that's my take as of now on this scenario of the product and all. It's too premature, too true. I mean, people don't have the time to go into all this nitty-gritty, but fundamentally, I'm personally clear that there is a large scope for all the players in the ecosystem to play. And I fully agree with Sri Krishnan that the deepening of the digital payment ecosystem, rural ecosystem, is not only a prerogatives of the banks. It should be a combined effort of each one of us, your retailers, fintechs, everyone you name, they all have a role to play into that. Unless we all bind together, then only this is going to be a successful.
Thank you very much. In last word, probably we have a couple of minutes, then we have a couple of questions to answer which has come. So please go ahead.
Yes, sir. So just to add to what Sri Krishna sir and Pandey sir has said, sir, I think fundamental objective, how I see, is to expand the market and digitize a lot more payment flows. And I would actually not use word payment now. I would say fundamentally you're looking at money flows in the country and the customers. And in every interaction, every segment, in different ways, money gets used. Sometimes you call it payment, sometimes you call it P2P, sometimes you call it remittances. I think any technology, any solution, and you're also going to be looking at next 20 years plus scenario for this to continuously grow. So I don't think an entity which is setting today can afford to ignore and limit only to the certain technologies or certain buzzword. Actually, they'll have to keep the mind open to all those that is available and can achieve objective of digitizing these money flow for the customers and the stakeholders, trying to keep as short as possible.
Yeah, thank you very much. I think one of the issues which I did not specifically ask, but which I would like to clarify is that, which is getting asked, is there is some section in the Payment System Act which has been picked up by some of the consultants to say that these new entities can only be public sector entities. It's not so. I think that section was there or inserted in the Payment Settlement System Act, and I can say with some authority there because I was in the Reserve Bank at that point of time, in respect of physical clearing houses, which had nothing to do with digital transactions. So that is one clarification. There are three questions that have come about, most of them interesting. But having been in the Reserve Bank for so long a time, some of these questions, we often give the answer. These questions we understand, we are reading, but we are not able to understand. So one such question is about the government not being supportive of umbrella entity news report. I think can hardly comment on that. Then the question is, what will be the expected landscape look like once the NUE licenses have been granted? I think that depends upon what's the number of licenses that Reserve Bank has in mind. It could be anything above one, anything below, whatever be that number. So we still do not know. It could be a few, it could be couple, it could be large number. So we'll have to wait and see how the impact of this is going to be on the landscape. And finally, I think the question is, what will be the benefit to the customer? I think the benefit to the customer is very obvious. It is going to be more choice, more bouquet, and possibly this competition would lead to the cost of transactions being driven down by the market rather than being mandated by the regulator or the government. I want to take this opportunity to thank all my panelists. Thank you very much for your excellent contributions, and thank Digital Money 2020 for this opportunity. Thank you very much.
Thank you all.
Thank you, Mr. Pandey. Thanks, Ri.
Thank you.
Thank you, speakers. Thank you, speakers, for an amazing discussion. Thank you to our agenda partner, PayPoint, payment partner, PayU, and design partner, Ethinos. Have a great Evil Money 2020, organized by Payments Council of India. Without any further delay, let's begin the valedictory session. It is my absolute privilege to introduce you to our speakers for this session. I would like to welcome Shri T. Ravi Shankar, Executive Director, Reserve Bank of India. We warmly welcome you, sir. It is an absolute pleasure to have you here. I would also like to welcome Mr. T. R. Ramachandran, Group Country Manager, India and South Asia Visa, and Mr. Vishwas Patel, Director, Infibeam Avenues and Chairman, Payments Council of India. Welcome everyone once again. Over to you, Mr. Patel.
Thank you, Shivani. Warm welcome to Ravi Shankar ji and T. R. Ramachandran. Good afternoon, everybody else. 2020 has compelled us to face an unprecedented by COVID-19 pandemic. So it's quite evident that the negative impact on businesses and economic business across the globe will be enormous, and it will take a while for retail, physical merchant establishments, all travel ecosystem providers, entertainment industries to recuperate. However, the unexpected positive gains has been for our payments industry with online and contactless payments soaring with more than 830 million debit cards, 8 million credit cards, over 5 million point of sale terminals and growing. It seems like all the policies and frameworks envisaged by RBI from last year by NPCI and all providers over 2.2 billion monthly UPI transactions as well as record transactions as well as through other payment modes as well as the new progressive legislations by RBI including the NUE, the retail payment systems by RBI. We are all confident of accelerating the pace of transaction economy from the current 18% over 50% or more by 2030. Our networks have played a very important role in this growth evolution, and especially Visa, which was first of the block in the country. And we have with us today Mr. T. R. Ramachandran, the country manager for Visa, for his take on the growth of this industry as well as the issues currently faced and how we can accelerate the growth process. Over to you, Ram.
Thank you, Vishwas. And at the outset, Mr. Ravi Shankar, a very warm welcome and good afternoon to you. It's wonderful to interact with you once again. I think the previous time was also digital, so that is a harbinger of the times to come. That ever since you've taken over, we've only been interacting digitally. And hi, good afternoon, everyone. And it's an absolute pleasure to be here for the valedictory part of this digital money event, where I know there have been a absolute spectacular array of speakers who've been sort of debating, discussing, and having thoughts about digital payments in the next step forward. The theme for this is very apt in terms of how you first take stock, which is the reassessing part, and consequently, I would imagine reimagining before re-energizing ourselves to the next sort of task ahead. Vishwas Patel has given some of the data of what this unfortunate pandemic has some slivers of light in terms of the absolute pickup of digital payments. I recall on the 8th of November 2016 was an epochal day for digital payments in the country. And I think that was the first sort of, I think many of us were thrown into the deep end of the pool, quite literally, and had to learn to swim, taking along with us the ecosystem, of course, under the guidance of the regulator, and a whole bunch of customers were entering the digital system for the first time. But if we see the intervening exactly 4 years now, from then to now, I think this trend is irreversible, and this trend now is secular. Be it in terms of the UPI payments, which has crossed 2 billion, be it in terms of the number of debit cards, which has crossed 900 million, the number of credit cards, the number of payment acceptance points, whether that is contactless, whether that is QR, whether that is the latest using Android phones as an acceptance device, we've indeed come a long way. But I think I'm going to just spend 5 more minutes and talk about 5 trends of digital payments and then what we want to do in the next sort of 5 years before I turn over for his valedictory address to Mr. Ravi Shankar. In our view, these are the 5 upcoming trends. Number 1, payment experiences are becoming more diversified than ever before, and consumers are driven by an abundance of choice. And it also means that payments must meet buyers and sellers wherever they choose to transact commerce. And payment is not an end by itself, but almost embedded into the scheme of commerce, whether it's online or offline. And a plethora of new players are fueling this diversification. And what is interesting is that the payment experience comes second, and ubiquity and where the commerce happens and the customers need to make the payment there is coming first. And that is the first key to relevance, which all of us need to keep in mind. Number two, digitalization of payments is accelerating with the proliferation of options as form factors, whether it's QR, whether it's apps, whether it's feature phones, etc. And we think the way people will access and interact with digital money will change. There is a proliferation of network. Funding sources will blur. We've all seen now buy now, pay later. Is that from your own account? Is that from a funding account? Those lines are blurring and changing. And standards will become a necessity again. Number three, payment infrastructure is modernizing. And in India, more than many other countries, I can say this with Mr. Ravi Shankar here that the RBI has played since the last decade a stellar role in setting up the infrastructure for payments in the country. Right from the days of making sort of check truncation to the whole IMPS and the way it has proliferated to where it is today. And we'll talk a little bit about that going forward. Number three, the line between money movement and data movement is blurring. And whether it is merchants, whether it is big corporations, whether it is P2P payments, people also want information along with the payment. What is the payment for, and the accompanying sort of information standards, which again on the other side causes data security and customer credentials and the need to keep that safe. But the line between payment and data is blurring. Number four, the payment ecosystem is becoming more flexible and more expansive. Vishwas will remember when there was an acquirer and there was an issuer. And now there's this whole category of payment aggregators and payment facilitators and a variety of aggregators who come in the middle. And there are sort of PSPs and other people who come in the middle. So it's no longer a four-party model, it's a multi-party model. So architecting and regulating those payments becomes a challenge in and by itself. And lastly, I would say the role of all of us as players in the payments ecosystem in terms of taking the customer along has never been more relevant than it has been. And in this context, as I said before, the evolution of digital payments in India over the last decade is closely linked to what the DPSS has been doing and some of the progressive thought process of the Reserve Bank of India, the government, which has been a sort of catalyst, industry associations like the IAMAI and the PCI, and of course, payment corporations, etc. Now, some important milestones which I just would like to touch upon in the context of reassessing where we are today. I think the Payment Infrastructure Development Fund is a super important milestone because at the end of the day, people need avenues to make the payment. And expanding the acceptance infrastructure and laying the railroad, particularly in a country like India, is very, very important. And the RBI is playing a central role in that, including perhaps for the first time in the globe, that the regulator is contributing also to the corpus of this, along with the payment networks and the banks and financial institutions to that, which is a sort of innovation by itself. Number two, I just want to talk about the regulatory sandbox. None of us knows which are the payment mechanisms which are going to work and which of those aren't. But it's a chicken and egg. We'll never know what works unless we sort of experiment with it. We are really excited about the RBI's regulatory sandbox. There are already some players innovating within the guardrails of the sandbox. And we look forward to, similar to the Monetary Authority of Singapore or what the UK regulator has done, we look forward to the regulator expanding the remit of the sandbox to allow stuff like what do we do for rural payments? What do we do for feature phone and non-smartphones, etc., which are some of the ambit of the regulatory sandbox. Number three, regulation needs to keep pace with the innovation in payments, and stuff like the regulation on payment aggregators and payment guidelines is sort of a welcome step in that. And I'm sure, sir, you will touch upon in your valedictory address some of the other aspects of that. Moving on to the very last part of, and the last 3 points which I wanted to make is what do we need to do going forward? Number one, first and foremost, we have to recognize that India is a digital nascent economy, and our consumers still are taking baby steps towards less cash and more digital. And we have to treat this fragile trust with the sort of emphasis on responsible innovation, security, because none of us, I'm sure, wants to take one step forward and two steps back. Because if one data breach and one sort of lack of customer confidence is there, then we all will go 5 steps forward, and none of us wants to do that. So while we all are keen on innovation, I would argue that responsible innovation and playing store on risk management and cyber security is absolutely the need of the hour. Number two, we still need to do a great deal to enhance customer awareness. And what do we need to do as industry bodies, as the regulator, as the government, as payment participants towards enhancing awareness is arguably mission critical. And number three, we need to embrace new mechanisms of what technology can play a role. Let me give you an example. The regulator has rightly said that payment credentials to be stored by merchant is fraught with risk because payment credentials can get compromised. Now, globally, there are state-of-the-art technologies such as tokenization and card and file tokenization, which sort of solve that and which keep the customer's data and credentials safe. Lastly, we ought to engender a spirit of interoperability while letting 1,000 flowers bloom, because India is such a heterogeneous market that you cannot have one size fits all. And in this context, the role of the regulator and the sort of imminent NUE or the new umbrella payments entity is a welcome step in the right direction. Net, I want to end by saying, as payment participants, all of us are really excited by the amount of progress the nation has taken towards digital payments, but at the same time recognizing that only 18% of personal consumption expenditure is digital, and therefore there's 82% still in cash, and therefore we all have an opportunity as well as hills to climb. With that, let me turn over back to you, Vishwas.
So now it's my absolute privilege to ask the Executive Director of Reserve Bank of India, T. Ravi Shankarji, give his valedictory address. So over to you.
Thank you, Vishwas. Thank you, Ram. That was very well thought out. 10 minutes of points that you made. I know it sounds odd, talking to a group of talking to participants who's so lame in life, at least professional life, is to promote digital. To tell them that I'm really missing, having these same conferences, etc., face to face. We meet each other and not so much on WebEx and Zoom and so on. That personal touch somehow seems lacking. The interaction somehow seems to suffer. And as far as I'm concerned, I learn a lot from interaction. So in my case, the learning seems to suffer. So hopefully today was the first day and the first country which had given an approval to COVID vaccine. UK has done that for the Pfizer vaccine. Great thing. I hope this pace picks up, and I hope this thing we put this thing behind us, and get to more natural levels of interaction. With that, I would like to thank the Payment Council of India for inviting me to this 13th edition of Digital Money. And it's my pleasure to deliver the valedictory address to this gathering of fintech and digital payment players, enablers, and supportive financial institutions in India. I understand there were about more than 1,750 registrations for the event, which is a great achievement. I congratulate the entire team of organizers, the speakers, and the participants for this wonderful show. Organizing an event of such magnitude, especially in the environment that prevails now, requires extremely nuanced and precise coordination across different time zones as well. So the collective efforts of the players in the payments ecosystem over the past decade has resulted in India being one of the pioneers in the retail payment landscape. I can see that conferences like this, or meetings like this, or interactions like this have been probably one of the main contributors to the germination of ideas in the progress that India has had. As I talk now, I understand the overall payments transaction volume in the month of November has crossed the pre-COVID levels, which is a good indicator that activity is slowly coming back to normal. News on the economic front is also, reasonably encouraging. After the dispiriting performance in the first quarter of the current fiscal year, the second quarter beat expectations, which bodes well not just for the economy but for digital payments as well. India now handles on a daily average of about 14.4 crore payment transactions for a value of about 4.8 lakh crores, which is excellent. The past decade, past decade has witnessed blossoming of a myriad payment systems, entry of non-bank players, and a gradual shift to the customer behavior from cash to digital payments. Keeping this in mind, the theme of the conference of ushering in a new decade is apt, considering the journey of payment systems in India. From the look of the agenda, unfortunately, I couldn't participate in many of the, in any of the sessions. But from the look of the agenda, I see that the discussions have been very detailed and comprehensive, spanning the breadth of technology as well as the evolution over time. There were sessions that reviewed historical developments and those that had an innovative and futuristic bent as well. Cross-border payments, an idea of global priority these days, also received due attention. I saw there was a session on it. Discussions covered progressive agendas like financial inclusion. There was even a session on reassessing regulation. I wish I had logged on to that one. All in all, it looks like 2 days very fruitfully spent for payment system participants. The Reserve Bank's payment system vision of 2021 envisaged empowering every Indian with access to a bouquet of e-payment options that is safe, secure, convenient, quick, and affordable. The vision recognized the need for continued emphasis on innovation, cybersecurity, financial inclusion, customer protection, and competition. Various initiatives were underway to realize the vision of payment system for the period up to 2021 and beyond. In the next decade, the country will usher in an era of digital payment revolution to encapsulate the spectrum of consumer base in this country. Now, there are various themes I would, regulation can focus on. I would like to focus on just one theme in the time that I have. Reserve Bank has acted both as a developer and as a regulator in many areas that is involved in, and whether it is development of the banking system, whether it is development of the financial markets, or whether it is the development of in the area, or it is the area of payment system, digital payments. Often this is an issue of sequencing. I have had some experience on the financial market side. Often this is an issue of sequencing and of enhancing the maturity of the market so that it takes on more and more of the developmental responsibility and achieves a basic minimum degree of responsible behavior. The Reserve Bank can then focus on orderly market conditions and managing the pace of change, a basic responsibility of any regulator. Just, I'll probably end this talk with focusing a little bit on what I meant by managing the pace of change, but for the moment, we'll let that go. I will discuss a few of the recent initiatives which has contributed to this segue of moving over from a very hands-on regulatory approach to a more hands-off principle-based developmental approach. One of the, I'll look at the more recent steps that have been taken. Reserve Bank has extended an opportunity to the payment system to think big and to come out with viable alternatives to existing large payment systems. I don't mean large payments, I mean large systems. Through the new umbrella entity channel, we want to encourage more players to participate and promote pan-India payment platforms that are not clones. I think I cannot emphasize this enough, that are not clones of existing systems, but in a true sense, alternatives to existing systems and institutions. What we are looking for is basically widening the menu that is available to the customer. The field is open to large and small players both through appropriate collaboration. It is now up to the existing or future payment system operators to improvise and come up with large-scale solutions that can stand on their own. Clearly, no one is looking too eagerly at run-of-the-mill solutions here, but then the field is open. I think as competing, profit-making entities, this is an opportunity that can be used extremely fruitfully to come up with something that is, mind-blowingly innovative, if I may use those words. At the same time, the payment ecosystem needs to grow in an organized manner. Both the regulated entities and the regulator need to be on the same page, a kind of shared vision of how we need to progress. Our initiative in promoting self-regulation, the SRO, I'm referring to the SRO regulations that cover evolution of standards, setting good governance practices, and moderating disruptive behavior. Through voluntary agreements, peer pressure, ear to the ground, etc. We understand this is a learning process for the participants, especially learning how to collaborate while being primarily competing entities. The process of consultation that our departments have had on this, in the run-up to finalizing these regulations, many of these issues did come up. And probably the best solution is time. As we move ahead, as people learn with experience, these things will get fine-tuned. But basically, what an SRO is expected to address concerns, what we expect an SRO to address is basically concerns beyond the narrow self-interest of the industry, to protect customers, participants, and other stakeholders in the ecosystem. In other words, the industry has to learn to prioritize long-term robustness over short-term interests. Yes, profit is important, but the faith of users in the payment system needs to improve over the long run for people to accept more and more payment methods that the industries will be offering over, through various innovations. As the payment, these are two of the more important initiatives that I'm highlighting to make the point that we are gradually segueing, as I said, from a very hands-on regulated developer and regulator of payment systems to someone who also wants the market to take initiative, not just in innovating payment products, but also in self-regulating. If the system has to develop in maturity as the operating payment system operators gain in experience, it will be time, and it is time, to move over to authorization on a more permanent, perpetual basis. The perpetual validity of authorization, which was announced some time back, the policy, to reduce this will reduce licensing uncertainties and enable payment system operators to focus on their business. It will also have corresponding benefits, from the point of view of a regulator as well. But overall, it would lead to more stability of the payments ecosystem. Similarly, Reserve Bank also has been, focusing on improving the customer grievance redressal and dispute management frameworks and generally to usher in a more or stronger risk management system with adequate transparency in terms of information and data security and security of the information infrastructure for prevention and detection of frauds and all that on one extreme, but also to ensure that business practices keep the customer primarily in mind. On the retail payment front specifically, the fast payment system has been growing impressively. The IMPS and the UPI systems, as Ram has said, it has crossed 2 billion in November, and it has been growing. I think a couple of months back when I gave one similar address, I was claiming that it has crossed 1.6 billion, and in next to no time, in about 3 months, I think it has gone to 2.2 billion. The rate of growth is impressive. Hopefully, this will be kept up. These systems all, in December 2019, Reserve Bank has made NEFT available 24/7 to facilitate customer transactions throughout the days, throughout the day and throughout the year. The NEFT 24/7 system facilitates fund transfers of any amount and affects the same in half-hourly batches. Now we will be doing the same for RTGS. Sometime in a couple of weeks this month, we will be moving over to RTGS 24/7 365. Probably one of the very few countries which would have large value payment systems available round the clock. The idea is that both in terms of availability over time, in terms of availability over space, in terms of the bouquet or the menu of options that a customer has, we would want to keep innovating and keep improving the situation to an extent that digital penetration in India gets comparable to some of the more developed countries in the world. The initiatives taken by us through various channels, further improving the retail payment ecosystem, would largely have to focus on feature phone based and offline payment solutions. I won't necessarily go into the details, but then about availability of mobile telephony devices has so far democratized our payments. As at the end of August 2020, there were 1.1 or 1.1 billion wireless telephone subscribers and about 700 million wireless broadband subscribers in the country. While various reports indicate that that there are more than about 450 million smartphone users, a large user base for feature phones still exists. So the next round of innovation needs to enable these future feature phone users to access the digital payment network as easily as smartphone users. So that is where efforts need to focus on. In fact, that was those were some of the technologies in the very first cohort that we had under the regulatory sandbox. The other area that payment systems need to improve would be in contactless payments and tokenization. Contactless payments, while decreasing the time taken for payment checkout, also ease payments for small ticket payment transactions. Tokenization technologies often form the basis of facilitating seamless e-commerce experience, fueled by mobile and other connected devices. The rapid growth in devices provides a significant opportunity for payments through any form factor and anywhere. For digital payments to take advantage of this opportunity, an appropriate regulatory framework built on the principle of innovation, transparency, and consumer control is required. Reserve Bank has already recognized this and authorized certain players to offer mobile payment solutions driven by such tokenization standards. You are all familiar with the regulatory sandbox system we have. The first cohort, unfortunately, because of the disruption caused by the pandemic, The live testing of the first cohort got delayed, but I understand a couple of them have already started them in November, and the remaining, I think there are about 4. They would be starting their testing phase shortly. We are also thinking right now of finalizing the second cohort so that work can go on simultaneously. When we decide on those things, we'll probably come up with due announcement. You would also have heard about the initiative we have taken in promoting innovation through setting up an innovation hub, which will basically act as a center for idea generation and development to promote innovation in the financial sector. You know the basic way that innovation hub works, but we would want the hub that has been set up, a governing council has been set up, led by Shri Krish Gopal Krishnan, the chairman, co-founder and former co-chairman of Infosys. He would be the chairperson of this governing council. It has other notable members. I'm really looking forward to a very vibrant interaction with industry, academia, as well as the financial sector. Under the aegis of the Innovation Hub, really looking forward to seeing great days ahead for our payment system. So broadly, these are the areas. I think another area where we need to look at is that for digital payments to truly replace cash payments, we have to have digital payment options that mimic virtually all the features of the cash payment system, primarily the anonymity. So the focus globally is on some sort of a central bank digital currency. The driver for those digital currencies may have been anything. It may have been the development of private digital currency or cryptocurrencies or anything. But then central banks are gradually coming around globally, in fairly large concentrations, to focus efforts on this and develop digital currency that would be as easy to use and has all the benefits of a paper currency. I think once we come up with a wider retail use of central bank digital currencies, I meant central bank digital currencies when I talked about digital currencies. When we have wider use of that, we would actually truly see the next quantum leap in the percentage share of digital currencies among the overall payments. I would stop here. I just wanted to refer to a brief point that Ram raised, which is valid, which is something that is always raised, that the regulator has to always play catch up, because especially a growing industry like the payment industry moves very fast. It is impatient. It is very excited about the new payment opportunities that it has created. So obviously, one can understand a little bit of impatience if the regulator acts as a bit of a wet blanket on the pace of change. But I think we all need to understand that one of the basic functions that a regulator tries to do is manage change. You see, people can change, systems can change, innovations can happen, and they can happen very quickly. But for those innovations to be not used unscrupulously by some fringe players, and for those innovations to gradually mesh and adjust with existing systems, it is important that the pace of change is naturally calibrated. The users need to get used to it. The systems need to get used to it. So one of the things that a regulator tends to focus on is managing that pace of change. In fact, my experience from financial sector is wherever regulators have given up on managing that pace of change have been basically the areas where most of the financial system crises have evolved. Look at derivatives and look at other things. Probably on the payment system, we in India are of course a little bit more hands-on regulators. But then the way one needs to look at regulation probably needs to undergo a little bit of change. That this is a function that a regulator needs to do as well. While I wish all the participants the very best. I really look forward to exciting innovations going forward. Never mind, the regulator's role of slowing down the pace of change. But I really look forward to, some innovations in the years ahead, and truly, see digital payments substantially replace cash. Thank you so much. Over to Vishwas. Thank you.
Thank you, Ravi Shankarji. And Shivani, you would like to close?
Thank you so much, sir, for such an insightful address. Thank you to our wonderful audience as well. Thank you.
Topic: reducing farming distress with digital payments in the agri-tech space. And for the same, I would like to welcome our special guest of honor, Sri Rahul Kaswan, Honorable Member of Parliament Lok Sabha. Sri Kaswanji is the youngest Member of Parliament from Rajasthan in the current term. He is a second-time respected MP contested from Churu Parliamentary constituency. He is also the member of Parliamentary Standing Committee of Transport, Tourism and Culture. We warmly welcome you, sir, and thank you so much for showering us with your esteemed presence today. I would also like to welcome our moderator for the session, Mr. Rajesh Desai, Chief Executive Officer and MD, Lyra India. I would now request Mr. Desai to please take over the session. Thank you.
Thank you very much. Thank you so much. Shri Rahulji, namaskar, first of all. And thank you. You're so busy moving around, and yet you have found time for this, So really a privilege talking to you. And thank you so much for this. I know you're a very young, vibrant, energetic leader, always on the move. So, getting 10 minutes from you also, I think it's my privilege to talk to you, Rahulji. I've gone through your biodata. It is very, very fantastic. Absolutely commendable. You're having studied at Delhi, and it's a lot of passionate social work in a business, successful businessman, a successful politician. I think it's a privilege to be sharing the same dais, the same platform with you. So, as Thomas said, it's more to do with farming and more to do with agriculture. Because I think you've spent a lot of time on agriculture, and we come from the digital payment side. So the basic objective is to see how, as an industry from the digital payment side, how can we help the agricultural side so that they also benefit in the entire digital reform, which Digital India is. In fact, I'm sure from the government of India has clearly a vision of faceless, paperless, and a cashless digital society of the future. It basically wants to digitally empower society and knowledge economy. Sir, my take on this is that the government is working on lots of strategies involving lots of multiple stakeholders, banks, non-banks, government, non-government. You form a pretty good side from the government, so you form a major chunk of the stakeholders. So reducing farming distress with the digital payment in agri-tech is what the whole topic is all about, sir. Rahulji, I would like to understand from you that how we as technology service providers and how you as a government stakeholder help in reducing the stress which farmers have or which the agricultural sector has in this current point of time. I know the government has done a lot in terms of providing online consultation via mobile applications, has provided payment services to these farmers so that their payment is seriously taken care of. But from your side, sir, how can you suggest, as we are an industry, what is that we can do, and what is that how you can help us in doing this?
Good evening, Rajesh. I have also a bad throat.
Yeah, I can hear you, Paswani.
So, see, the basic the rural economy, the government has started dealing with the people through the digital payment mode. No doubt about that. And the moment when the government announced the digital payment system and the what you call this Ujjwala Yojana was launched in this country, the government direct connection with the government dealing with public at large is through digital mode only. That is for sure, and people are now becoming habitual to this new change which they are seeing in their life. A lot of changes people have accepted. Also, the wallet system also people have accepted that. No doubt about that. We can't deny. And the old age people who are finding a little bit to raise the I think it's positive. Uh, and but they are not fond of having you know, push from which do happen a lot of times, which is area. Agriculture, this economy that just this is not with the infrastructure. It is the farmers are not feeling comfortable with the new laws. Is a different thing, but something with the digital, with the money thing, I don't think there's some distress and all. People have the payment structure between. So it's a completely cash thing because of how
Hello? Hello? Hello?
Hello.
Can you hear them, Karim? Because I cannot hear them now.
Yes, actually, I think his net got cut off. I will just check. Hello. Yes, I think Kasmanji is right. I think Kasmanji's net connectivity, because he was in a remote area, he's lost the connectivity, and these are things that we have to face during live sessions that we do during virtual conferences. But yes, we assure to all the delegates that we would be recording these sessions and putting them up on the platform so that all the delegates can have a look at it. Rajesh sir, if you could take out time for us for the recorded session later, we will post that later.
Sure.
Thank you. So I would really, however, want your insights on this topic. If you could end it, and then we would like to thank the audience and everybody for joining in.
Right. So, we lost Rahul Kashwanji, my thoughts probably is digital payments, digital services are playing an instrumental role in building multiple industries together, or bringing multiple industries together. Be it the technical industry or the pharmaceutical industry or any industry. So I think it's going to play a very important role in the agri. Do we have other questions as well?
Yes.
Yes, Rahulji, can you hear us? Garima, can you hear Rahul?
No, sir. Sir?
I hope you heard me what I was saying, Rajesh.
Yeah. I did hear you. Thank you so much for that. Shri Rahulji, I know you're short of time. There's a problem in terms of connectivity because you're traveling and probably in the remote regions of your state. So you, of course, you're doing an excellent thing, if I could call that. That demonstration of you doing something practically is more than speaking. So I think that value is more. So given value to your time, do you want to ask me a few more questions? One or two questions more?
One more.
One more question. Okay. So you addressed that the stress is there. You feel that they're not really stressed or there's no distress as such. But yes, technology and agriculture can come together, collaborate such that farmers can live more easily in terms of giving services and accepting services as well. So yes, digital payments and digital services can play a very instrumental role when it comes to agriculture and when it comes to farmers as well. My second question and your last question to you, Shri Rahulji, is the fact that these are very uncertain times, given the fact this is a COVID situation, a pandemic situation. Everybody is in a sort of problem, be it individuals, be it organizations, be it different bodies, be it government bodies. The only way to survive this and the only way to sustain and work in this is by changing and adapting immediately to the surrounding environment, being more agile and developing and demonstrating yourself so that you actually get yourself in the current mode. Historically, it is always shown that whenever there is a crisis, it can also be an opportunity in disguise. So you as a government stakeholder or you as a part of the government, do you think that this COVID pandemic can be actually a boon in disguise for the economy of the state and the economy of the country? What are your takes and thoughts on that, Shri Rahulji?
See, what I feel is that people will be more on the health conscious part of it. Health will be the priority and the basic the food regime of which we used to have, because the culture of food in the country depends from area to area. Mine is a very dry and very dry and very hot and very, yeah. People used to have it traditionally. They used to the nutrition of their diet and everything was something very different, which have changed. So people are more health conscious now. Ayurveda will get a lot of gains in the it will come into the people's lifestyle. Though Ayurveda itself is a lifestyle, it's not a medicine. So these things can be changed. Economy, economy is people. This agriculture sector is opening up. A lot of industry, agro-based industry, are coming into my constituency. So for that, I think surely it will be increasing, and food industry will have a lot of investments in it, which I believe. Because of this new law, which might have my constituency, especially Rajasthan, also, because our share in the MSP purchasing was too low in the if you see overall country. So I do see that there will be opportunities. Though my constituency doesn't have any source of the industry of the economy of Rajasthan is based on mines and minerals, tourism, and gems and jewelry. These are these are the basic things which drive the economy of Rajasthan. We do lack everything. We have entrepreneurs. Which are working pan India. So what I see is that in the agro-based industry, we'll be seeing a lot of investments and a lot of activity will be will be in the sector, sure, and for that. Beyond that, personally, I think that food habits of the people have to change and will be changing. More improving food and nutrition will be a part of our lives now. That is what I see.
Great. I think that's a very valuable thought and a very valuable view which you have brought to us in front of the audience. Just to quickly ask, would you love to talk something about the new agricultural bill? Because we as digital payment players, can play an instrumental role in that. What is your take on that?
See, the bill is good enough, but there are some reservations for the farmers of, especially of Haryana and Punjab, because their share in the MSP purchasing was too high. 97 of 90% of the produce was being purchased by the government, both of the Rabi and Kharif crops. That was not the case of my constituency. It was hardly 5% only. So that and the farmers will be getting the opportunity to sell his produce anywhere in the country. That is a big takeaway. And there are a lot of little bit nitty-gritties which in my constituency I don't see anywhere, but it is there in Haryana and Punjab especially, where farmers do feel a lot of insecurities there between them about the big businessmen, corporate houses. They might take away the whole show. So they are, and I think government is working hard to convince them and to make to clear the things which are giving them that kind of a thought. But in my constituency, somehow, see, any law which you make, it might take, after you implement it, after some time, might need some changes in that about the resolution system, the complaint resolution system. It might need a relook into it. After some time, we just don't know. We are trying something new. It is at the end of the day, we are not taking away anything. We are giving an alternative system to you. If I want to go in an Ola or Uber, I have option. So if I want to sell my produce to a local mandi, there was no option in front of me. Right now, an option also. I can sell to Rajesh also directly. Why not? So that is option. If I know Rajesh, if I'm comfortable with Rajesh, I can do business with Rajesh also. Otherwise, mandi is there for me. So the bill doesn't take away anything. It's giving you an alternative. But for Punjab and Haryana, it's literally, because mine is a bordering state. It is literally, they have a lot of insecurities, and I think that government is working hard, and they will surely listen to those farmers, because lakhs of people are on the agitation. So they should be heard. Their concerns should also be heard, and government is working hard to make a way into that. But otherwise it's a good reform in the agriculture sector, which was required since last so many years.
Yeah, very true. In fact, India is a agriculture economy, and the economy of India is strongly based on what you support or what you do socially.
Rajesh, we have, as a member of parliament, I'm working since last 6 years. My father was also a 25-year member of parliament. So we have a lot of basic input, but this is not right time, and don't have enough time also today. Let us sit somewhere time in Delhi, and we will discuss how can. I'm working with a lot of organizations also. We are working for our constituency very hard, and we will be meeting together, and we'll see what can be done. So surely let's meet in Delhi sometime, and let's work out on those lines. Right now, I would like to take a leave, because people are waiting outside like that.
I understand. Taoji, thank you so much for your views, your thoughts. As a young, energetic, vibrant, enthusiastic leader, I see a lot of positivity and exuberance in you to build a very strong digital India for the future. Thank you so much.
Thank you, Rajesh. Thank you. Thank you, ma'am. Thank you very much.
Thank you, Shri Kaswanji, for joining us.
Thank you, ma'am.
Thank you very much. Thank you so much.
Thank you, Rajesh sir, for this amazing session, and thank you to the audience. Before signing off, I would like to thank all of our partners, our title partner Lyra, our powered by partner PhonePe, our agenda partner PayPoint, our payments partner PayU, our gold partners Visa, Freshworks, AWS, our silver partners Zeta and Paytm, our knowledge partner PwC, and our design partner Ethanos. Wow. So this indeed has been an amazing 2-day experience for all of us, with wonderful insights from stalwarts of the payments and the fintech industry. On behalf of the entire Payments Council of India, we once again thank all of you and promise to be back next year with an even bigger and better digital money. Thank you so much. Thank you, sir.